Good morning, good evening, wherever you are in the world. I literally just sat in here to do this with you guys. I'm very excited. I'm very pumped. Let's wait for everybody to come through from the other stream. I'm gonna look at the charts until then. Let me just pull up my screen and see as people come in. Let me know in the chat if you're here. Let me know if you know. Oh yeah, I see the chat. Okay, cool. Thank you for all that you do. I guess it's for the team. Big up for the team. Very much lighting it up. Simon, we see each other here as well. What's up, buddy? Yeah, George. Like big shout out to George. I've listened in for the past 10-15 minutes. Very great info. Very great info. Pretty cool. Smash that like button. Subscribe to the channel. Shauno in the house. Good day. All right, guys. All right. So I don't know where you are in the world, but it's 6 a.m. here. I got out of the bed, and usually I wake up at like 5:30. Then I do my cold plunge. But it's been such crazy days, and it's a Saturday. So I was like, I'm not gonna wake up that early. So I didn't really look at the market yet. But yesterday evening, I don't trade on the weekends. But yesterday I had to add to my long position. I'm long for a while now, and I had to add to my long position because it looked very good. And I try to disrespect the pump yesterday and try to short the top. And I missed it by like $10 and then it reversed, but I'm very happy now that I missed it because I think we are continuing up. We can look at the market as well. The whole section here is titled Trade with Smart Money, but I was thinking we could talk, we can talk about trade with smart money. I think it's very important, but it's very difficult for me to explain everything in 1 hour, so we can touch on that. And also I want to give you a little bit of encouragement on trading and why it is absolutely possible to become a profitable trader. So guys, let me know in the comment, how do you like this so far, and if you have any specific questions to me or anything that I should look at. Great day you had, Mike. I'm very happy that you had a great day. Also, how long are you here for? Like, when did you join the stream, guys? Midnight in the States. That's good. Going strong then. You've got a couple of more hours. I hope you stay up. 9 p.m. California. Okay. Hello again, everybody. Oh, I see you. Oyata Tatanka. Did you stay since last night for me? Are you also been on the stream last night? Okay. Greetings. All right. So let's jump right into the thing. Let's talk a little bit about, I want to start from the very basics, because I think it's very, I've also had a 2-hour session a couple of hours ago in session 2, so you can rewatch that, but I just want to talk a little bit about basics because I think it's very important. So number one is I want to talk to you about candles and price action and market structure, because I can start talking about order blocks and fair value gaps and inefficiencies and liquidity traps and inducements and all that, but I don't think it will make any sense if we don't set the basics. Is the music good, or I just pull it down a little bit? I'm actually Simon called that for 200% about what is it before, so I actually got into that. 5 a.m. Yeah, so we're almost there. We're almost the same. Yeah, not financial advice here, obviously. Everyone have their coffee refills. That's the question. They're just asking. All right. So I want you to look at this and tell me in the comments if you know what the candle represents. And until then, I'm just gonna draw here. So let me just look at, where did I start drawing this? So what does the candle represent? When I see a bullish candle like this, what do these lines represent? And what does the candle represent? 3 p.m. Sydney. 3 p.m. P. Sherman, Vailable Bay, Sydney. I know that. From Nemo, Finding Nemo. Okay, so this here is a candle, right? It's a bullish candle. Now, you might say, oh, Fefe, but I know this, but let's just wait it out, okay? So, if you look at the wick, this is the highest price. On the top, like on the top of the wick, is the highest price on that hour. Let's say this is a 4 hour, right? The top of the body is the closing price. The bottom of the body is the opening price if it's a bullish candle. And this is the lowest price, the bottom of the wick, right? So if you understand this, this means that a 4 hour, exactly, Mike, exactly. But a lot of people say that, right? They're like, oh, it represents price action. But what the fuck does that mean? What does it mean? It represents price action, right? The highest and lowest price in that day. Also, but also it represents, and on that day, you see already, like, depends. If it's a daily candle, you're right. If it's a 5-minute candle, you're wrong. So this is the body, the body of the body of the candle represents the opening. The body of the candle represents the opening price. The top of the body represents the closing price. The highest point of the wick represents the highest price. The lowest represents the lower price. Now, a lot of people ask me, what time frame do you trade on? And what time frames do you use? And my answer is all of them. Why? Because the lower you go on a time frame, the more information you see. So if I look at a daily candle like this, that tells me nothing. I cannot take a position based on this. I can't. It doesn't matter because I don't know where to enter. I don't know where to exit. I don't know. You know, the only thing I know is that we closed higher than when we opened, and throughout the day, price touched down to this level and went onto this level. Now, if I start considering this, right? If I start thinking about this, I can go and say, okay, so there are several options, several ways this price action could have happened. For example, let's say this is a daily candle, right? Throughout the day, this could have done this. Opened, immediately dumped to the lowest point, right? And then started moving up. And then at the end of the day, take the high and come close down here. This would be, let's say, the 5-minute chart on the day, right? So this is what the candle represents. Or it could have done this. Opens, news comes, for example, London Open, news comes up, and then news is fake ETF, price comes to the lowest point, and then starts climbing nicely and closes here. Or what could also have happened is this, bum, 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 bum. So the whole point, what I'm trying to make is that it could have been all around the place. So the only thing we know is what it goes, and this is why we are the only 4 things we know from a candle is where did it open, where did it close, what was the highest price in that time frame, and what was the lowest price in that time frame. And now you can start going down because one daily candle is made by 2 12-hour candle, right? So if you know that it's made by 2 12-hour candle, then you can see 2 candle that could go like this and that could go like this. You know, this could be the 2 candles. And then you go down on the time frames in a 4 hour, 1 hour. And then if you see, for example, you can see 24 1-hour candle, right? 24 1-hour candle on the daily. And if you go lower, there's like almost 100 on the 15-minute and so on. So you will see much more of the story that this candle is telling as you go down on the time frame. This is the importance of this. Now, what is price action really? So when we are in an uptrend, we are making, and then I'm going to look at the chat. Okay, so let me just put this up here. I agree. So when you are in an uptrend, you take highs, lower highs, and we call them lower highs because it's the higher than the previous low, higher highs because it's higher than the previous high, right? So this is what we do. In a downtrend, exactly the opposite. We go and make lower lows and lower highs, right? It's very important that you want to build your house on solid foundations. So imagine if you want to build a house, right? If you want to build a house, you would never build your house on weak foundations or mud. You would always consider building it on strong foundations, and you will make sure that your foundation is good, because if it's crooked from the very second, your house will be built on a very bad surface, and all your effort gone to nothing. This is the same with trading. So if you are building a trade, you always want to build it on strong levels. Now, what are strong levels? In an uptrend, every low is strong and every high is weak. So this is strong, this is weak, this is strong, this is weak. And why is that, right? Why is that? The reason is because in an uptrend, we expect until we shift market structure. So we expect to be seeing another higher high, and then another higher low, and then another higher high. So this is our vision, right? This is our expectation. So if that's our expectation, we can make sure that, or we can know that the weak level will be broken. So if the high should be broken, that's a weak level, and what level breaks that is the strong level. So consider when everybody talks about counter trading, what you want to know is that you do not want to counter trade, and counter trading means you are basing your trades on weak levels. So if I would take a short here, I would counter trade because I expect a weak level to be my stop loss. Now, my stop loss has to be a strong level, because, if I don't want to get stopped, it better be a proper level that should hold. So if I base my whole trade is based on this weak level holding, I'm probably lost. So this is what counter trading means, and this is why you always have to follow the trend. So now that we've got these out of the way, I'm gonna look at the questions. Someone asked, preach about patterns. You know what? That's actually not bad at all, because that's also in relation to smart money. So why do patterns work, right? So let me know what pattern is this. And also let me know what patterns do you want me to explain. But let me know what pattern is this, right? And then also at the same time, while you're at it and letting me know what pattern this is, I'll ask you which pattern is more likely to work out. So this is like, we call this a flag, right? Or retail calls it basically like a flag. So the only difference, so patterns do work, but why is it that patterns work sometimes and patterns don't work sometimes? The reason why patterns work is because of liquidity. So liquidity is basically limit orders that are left. So mostly stop losses. So we have three types of liquidity. We have the trend line liquidity. So when price is bouncing from a certain area, people place their stop losses around these levels and around these lows, and then trend line builds up, and then the liquidity is usually taken by an institution for them to get their position in. I'll explain it in a second, and then the price moves on. The other thing is relative equal lows. Relative equal lows, relative equal highs. Yeah, so this is liquidity as well. And basically this is it. Yeah, so we got trend line liquidity, relative equal lows, relative equal highs, and all strong and weak levels. So all strong and weak levels. So all lows and all highs basically. So if you look at a trend line liquidity, this one, if you look at trend line liquidity, basically what that means is that an institution, so if you're an institution, right? If you're an institution, you will need to get your position in that is worth 100 million, 200, 300 million dollars, right? That's, or even $1 million, it doesn't matter. But what matters is that you need to get your position into the market. But the problem is that guys with big money, if they want to get their position in, they will move the market, right? So they have to find a way to get that position in and not move the market. And the only way to do that is to, so to say, engineer liquidity trap retail. Why is it that 95% or 98% of retail traders lose money, and you know, the rest makes all the money, the 2% makes all the money? It's because the whole, you know, you can call me a conspiracy, but this is what it is that the whole system is designed to trap you into believing that a position is good, and it's not. The whole system is designed to, you know, all the indicators, all the trends, or everything, or a lot of things that we learn as retail traders are known by the algorithms and are played on by the big guys and used as against us, basically, right? So if you look at, oh, by the way, guys, if you like this content, follow me everywhere. If you consider this, what happens is that, let's say there is someone who wants to get a big player who wants to get in on a position, right? Who wants to get in on a position, on a long position. Now, if they would buy the asset right here, it would result in the price, like 100 million worth, it would result in the price pumping, right? Thanks for putting this up, David. Follow me, you see it down here. So it would result in a massive pump because they would buy up the order book, not the order block, but the order book. So they need to engineer liquidity. They need to trap retail in believing that this asset is going to go up, and therefore get them long. Therefore get them into a long position that they can then liquidate and then get their position in. There are two types of liquidity. I mean, two side of liquidity. We have the buy side liquidity and we have the sell side liquidity. Buy side liquidity is, let me just do this. Buy side liquidity is always on the top. Always on the top. Why? Because if you are shorting, what do you do essentially when you short? When you short, what you're saying is that I will sell this asset. You know, if you don't have that asset, you borrow that asset and then you sell it. But in reality, when you short, you basically sell an asset and you expect the asset price to fall below your sell price. Therefore, you can buy back and keep the difference. That's what you do in a sense. So if you get stopped on a short position, that means that you have to buy that asset back, right? Because you sold it and then now you're stopped. Now you have to buy that asset back. This is why we call this buy side liquidity on top. And on the bottom, complete opposite, is the sell side liquidity. Because when you're down here, for example, the one thing you want to do is long. So longing means you buy the asset, you hope that the price goes higher, you can sell it and keep the difference. So if you get stopped on a long position, you have to sell that asset. And that's why it's called sell side liquidity. So what you want to do is that you want to identify these liquidity levels and know that these levels will be broken, liquidity will be taken, because everybody believes that, oh, this is the trend line, we're gonna bounce, whatever that is, very good, I'm gonna go massive long here. And then they can drive the price down, liquidate those shorts, get these stops activated, get more stops activated, and then this is when you see a wick, or this is when you see like a big rundown and then an immediate pump. What happens there is that they can get their positions when everybody, what did we say, right? This is the sell side liquidity, right? So what did we say? If they want to get in on a long position, they need people selling it to them. Otherwise, they would buy the order book up. So what happens is that when they start driving the price down to the liquidity levels, they liquidate a lot of long positions, and the liquidation, as we learned, means selling, and they buy all that up and drive the price back down. So talking about patterns, how many times did you experience this? You have, oh, it's double tops, let's long, right? Let's long, it's double tops. How many times did that happen? You long, or it's short, sorry, not long. You short, you place your stop loss above here, and this happens. How many times did you see this? This is exactly going back to the whole works, you know, what works, what doesn't work. So if you saw this pattern, I'm pretty confident you did see it, then you know that this whole thing is because of the liquidity that is here. Relative equal highs, relative equal lows. So you always have to consider, whatever you're trading, whatever level that is, you always have to consider that, you always have to consider that these things are going to get wigged. Okay, So let's get back to this. So when the pattern, George, you do have the energy. You did very good. Okay, so I said all the time. Yeah, so this is the thing. Like, you have to know what, like, a double, and this is the difference. Like, this is such a cool topic, actually, by the way. This is such a cool topic. So a lot of time, let me just 2 seconds, guys. So this is such a cool topic. Sorry. So this is why patterns work, right? So patterns work because this is why they work sometimes, and this is why they don't work sometimes, right? So the way they work is that if this is not relative equal highs, but liquidity is taken. So if this went higher than this, the likelihood of your trade working out is much higher. What is happening here? You know what I mean? Because then liquidity is taken, and then you can say, oh, it's double top. Yeah, it's kind of double top, but liquidity is taken. So you can be confident that this order block up here will hold, because there's no reason for it to break above here. This is a strong level. You want to build your foundation on strong levels, so why not? It's the same thing with the flag, right? So when you say it's a flag and it will hold, the only difference whether this will hold or not is how liquidity builds up. Here we've got, you know, a decent trend line, and that means that that trend line is liquidity, most probably, and those levels will hold. So, but if this could also be considered as a flag, right? Because this is also coming down. The difference is that it takes all the liquidity here. It takes all the liquidity. So that means that there's no like a trend line liquidity for it to go back up, because it went down in a manner that is like completely efficient. So there were like big trend lines and relative equal highs. All this is taken. You know, this could have been highs, relative equal highs, but no, it's been taken. So what you want to look for is, for example, here, do I have relative equal lows? Am I engineering inefficiency somewhere else, you know? Because this is when the fake out happens. You see this, and if I look at this chart, I already see that we build up liquidity here, we build up liquidity here, and this wasn't a liquidity, trendline liquidity that I think should be taken. So I will be looking for a short position here. I'm not gonna long this because I know it doesn't look right. So when you look at patterns, always look at liquidity. So patterns work, but they don't work why people think. They work because of liquidity. All right. Cool. So let's talk about price action a little more. And then, you know what? Do you guys want to let me know? Do you guys want to look for charts, or what should we do? Should we look for charts? Should we do education, or what is this text up here? Join us on our new. Okay, so let me know what you want to do. Do you want me to look at coins? Do you want me to do some more education? I actually don't trade on the weekends because I don't like the price action on the weekends. But we can look at you know, whatever is interesting, or we can continue with the alpha. So price action. So a lot of times what you see is that, for example, again, who is trading support and resistance, right? So what do you say here is that, okay, support becomes resistance. Now, there's a lot of things, guys. It's very important. There's a lot of things. I can't give you everything in 1 hour, right? So okay. Hold on. Okay. So there's a lot of things. I can't give you everything in like 1 hour. But I'm trying to give you snippets that you can take away from, and then obviously this is why I'm also saying follow me, and then we can chat and I can give you more of what I have. But it's like a long process to understand everything, so don't worry if you feel lost or whatever it is. And also I think I have to talk about that as well. I like to talk about this because you see everybody like, oh, I made this much money and I made 189%. Cool, send me a monthly P&L. Always ask for a monthly or 3-month P&L. You know, I'm very happy to share my 3-month P&L, no problem. But I think whoever you're learning from, you got to look at their 3-month or yearly P&L, right? Because everybody, I can take a 50x position with $1. I can do it 15 times, 20 times, and then just send you the one screenshot where I made 200, 800%. Leverage doesn't matter, by the way. So even if it's 200%, if you risk 1% on your account, you know, that's pretty good. That's what you should focus on, not the percent. And it's very, very important to not get discouraged by seeing all these guys making all these gains, because you have no idea what people are on the internet, right? So only trust what you see. People showing, yeah, here's this 200% trade. No, it doesn't matter. It doesn't matter. Everybody can take a 200% trade. I can put, as I said, isolated margin $1. I can do it 15 times, 20 times, 100 times. I only lose $100 and I have to get it right once. Or I can go hedge and go long and short in the same time before FOMC, and then screenshot the one that's good. So don't trust everything you see on the internet. Is very important. Ask for a 3-month P&L, whoever you learn from. Say, hey, can you please post a 3-month P&L, because I think it's missing in the industry big time. And so what I wanted to say is that don't get discouraged, because you will learn. Don't get discouraged. It is very difficult to be, very difficult. It is very difficult to become a trader, in my opinion, to make a living off of trading. It's exhausting. You will get lost. You will be depressed at some point. You will, even though when you will understand everything, you will not understand some part of it. You will struggle with your mind. You will, it will be a real self-mastery and self-discovery to become a trader. That's what it is about. When everybody starts out, you think that it's all about the patterns and all about the strategy, and no, it's not. It's not about the strategy. It's not about the patterns. It's primarily about, there is a 10% TA in it. Like, you have to have a strategy that works, but that's basically, you find a strategy on YouTube or whatever that is, and you use that strategy. Some strategies are easier to learn. Some strategies are more difficult. Some strategies will have a very high hit rate, or and also you have to understand yourself, right? So trading is a self-mastery, a journey of self-mastery. So you have to understand whether you are, a long-term trader, whether you're a short-term trader, whether what can you stomach better? Can you stomach better a drawdown of 80% and then you make 200%, or you rather in and out of the market? You don't like to, for example, I myself, I don't like to leave trades open overnight. I do it sometimes, especially if I'm de-risked, but I don't like to trade. I like to look at the chart. I would like to monitor the trade when I'm in, and that's it. That's just me. That's how I trade. I get in, I take 1 to 3 on a day, I'm done. I risk 1%, I make 3% on my account, and I'm done. Like, I don't need. If you have a large enough account size, that's good. And this is where the other thing comes in, right? Is that a lot of people, I really found that a lot of people struggle with size, because the only difference separating a gambler from a trader is proper risk management and following a trading plan. I'll say it again. So the only thing separating a trader from a gambler is a risk management and a proper trading plan. That's the only two things. Because if you don't have a risk management, if you don't have a trading plan, and you don't follow that trading plan, that means that you are basically just betting on price going down or up, So it's very important to have a proper trading plan. And a trading plan is not like, when this crosses, I do this. That's good. That's a strategy. But trading plan means, how much do I risk in a day? How much do I risk on a trade? How many trades do I take a day? What times, what sessions I'm trading? What is my daily routine? Every day I come in here to the charts, I sit down, I look at the Dixie. I look at the economic calendar. That's my first thing, right? I look at the economic calendar. Are there any news coming today, this week, whatever, that can impact my trades? Then I take a note of that. Then I go into the Dixie, the dollar index. I look at it. I say, what does the Dixie do? That's the leading indicator for most of the market. So I got to understand that for the day, for the week, for the month, whatever that is. Then I look at the Euro USD. I see, okay, in relation to the economic calendar and in relation to Dixie, what is the euro going to do? And then I look at Bitcoin in relation to all this, what Bitcoin's gonna do. And then I look at all the altcoins that I want to trade. So it's like a chain, and that all has to be laid out in your trading plan. And then risk management, meaning when you have a small account, and then I'm going to look at the comments. I see someone is writing here. When you have a proper trading plan, and what did I want to say? Risk management. Yes. So when you have a small account, the problem comes in that I can tell you that I can confidently make 15% every month consistently, 10-15%, right? And you might sit there and think, oh, I only make 15%. Yeah, dude, but I can make that consistently with sleeping well, spending time with my family, whatever that is, So like, if you are after the 50% gains on a trade on your account, that means you're risking way too big. You might be able to pull, like, that doesn't mean that I'm not pulling in 1 to 10, 1 to 15 risk reward trades, but that means that I'm protecting myself, and my only job as a trader to come in here and make a 1 to 3 every single day. You know, basically that's what it is. Let's look at the comments. This is important. Really good point, Fefe. This is the reason why I hate this image of profits and awesome trades, because it is nothing more than ultra smart marketing. But not only from the exchanges, guys. Not only from the exchanges. It's from, if you look around the crypto Twitter or whatever. Yeah. Exactly. You actually achieve the exact opposite. This is one of the reasons why I do this as well, because I think we have to talk about these. Because exactly, a lot of, and I know I talk to some pretty cool people, and you know, they get messages saying, oh, these guys are making a killing and I'm just so stupid. No, you're not. You just might be in the wrong place. Should not be allowed in school because it's more damaging to people than it is. I think you know, I've been trying to push for this. I think you should only be allowed to post a tile if you post a monthly PNL. That's what it is, because a 3-month PNL, that tells, have you been profitable in the last 3 months? It's a super simple question. Do it, and you would be shocked. You would be shocked. Okay, cool. So let's. I wanted to say one more thing, guys. If you I see more and more people tuning in. If you like this, follow me. You can reach me anywhere here, and let me know in the comment what we should talk about. All right. I wanted to talk about one more thing, is that the size. So when you come in here and you say, yeah, but I have a small account of $200. The reason why I'm risking so much, I think this, I see this on, and a lot of times the solution is actually putting on size, because I had some students and they were the exact same. They knew the TA exactly. They were calling what's gonna happen on the day. They were calling, you know, where the price is gonna go. They had perfect entries, and they still risk so much. And I was like, why can't you control? And then the reason most probably is because you come in here, you have a $200 account, you're making 20% in a month, $20 in a month, you know? So that's just not worth all the effort, all the wait, all that, you know, and I understand that. But imagine it's not about, this is what I want you to focus on. Forget the money. Forget it. Focus on the percentages. If you can, I promise you, money is everywhere in the world. I promise you. If you can pull in consistently 10, 15% for 3 months, right? Or whatever that is. If you can do that on compound, you will be able to find money that invests for you to trade their money. But you have to bring the results. Whether you bring the results with $200 or $200,000, the only difference is your perception of the $200,000 and the $200, and obviously low liquidity depending on the coin and whatnot. But in general, that is what you want to look for. So if you're able to bring in consistent 10%, 15% for 3 months, then you can go to someone, or you know, and borrow money. Or if you trade forex, trade forex as well, which is to some extent much better than crypto. But if you trade forex, you have options to do. And even if you trade crypto, by the way, there are options to do a funded account, which means that you get funded by a prop firm. They give you $100,000, $200,000 account that you cannot withdraw and all that, but you can trade based on certain criteria. So the way it works is that once you can prove yourself and you can make that 5 to 10% in a month or 15% in a month, whatever that is, you can go buy a challenge. Cost you $500 to buy a $100,000 account, and if you can pass the challenge, you can make the 10% or 8% without, you know, going to 10% stop loss. Or they have all these criterias. If you can do that, you can keep the account and you keep 80% of all the profits that you make. So this is why I always say, do not focus on the money. I know it's difficult. I know it's extremely difficult, but once you break through there, it will click. Because if you can make 10, 15% consistently, you will be able to get the money. And if you make 10% on a $100,000 account, it's $10,000, and you can buy a $300,000 account, you know, and you can have a 25% double up every 3 months. So then if you make, you know, if you make any money, if you're profitable in the next 3 months getting one of these accounts, you'll be able to have a $400,000 account, $450,000 account. I mean, you make 10% on that, that's $45,000. You know what I mean? So It's just, and I know it sounds cool and whatnot. I'm not saying it's easy. What I'm saying is possible, if you focus on the right thing. It's turtle race, not rabbit. Exactly. So like it is a marathon, not a sprint. Most humans can't think exponential way. That's right. So you gotta think long term. You gotta think as a marathon. You gotta think as, you know, I gotta make, if you make 1% every day, compound, if you make 1% every day, you know, you're gonna double or triple your account on compound. I don't know the exact number, but you're gonna make a shit ton of, no, you're gonna, hold on. 1%, you're gonna make like 40 something. Let's look at it. Compound interest calculator. I know you don't see my chart. So let's say you invest $500. Let's say you daily make, what should we say, 1% for 1 year. I don't add anything. So if you, yeah, it's 20x. If you make 1% on your account daily, 1% on your account daily, and you compound, you would make $11,000, right? $11,600. So, and you know, again, like it's 1% a day, and it sounds, I'm sounding like it's always so easy, and I'm not saying it is, but it is possible. Maybe not 0. Maybe not 1%. Consistent. I'm talking about consistent profit, guys. I'm not talking about gamble. I'm talking about consistent profit with proper risk management. Let's say I'm making, yeah, 15% a month. Yeah, exactly. 100% a day. You make 2,000. You're gonna make 4x on your account. 4x, pun intended. No, but you're gonna make 4x on your account. So if you look at this and you say, okay, if I have $10,000 account, you know, I'll make $40,000. So it's just a perspective. It's just a perspective that you gotta keep. All right. I have this Bitcoin long open. I have gotten in a long position right here. And this is why it's worth following on Twitter. I've been sharing all this. And now I thought I think this is, I actually added a lot of size. And here I'm still in profit. But if this breaks, if we break below this 29,100 is my stop, by the way. I think 29,100 exactly. So if we break below there, we are going down. Question is whether this was just a retest to this inefficiency candle up here to the 50, and then moving down, or we are going to move up. And I actually think that we are going to go up. Maybe we retest down here. That will also be interested in buying in. But this is my theory for now. All right. So I wanted to talk about support and resistance. Why support and resistance work? How many of you heard that resistance becomes support once it's broken and retested? How many times did you hear this? Let me know in the chat. Did you guys hear this? Look at it before. All right. Okay, so what is a break? Just going under or closing? Yes, so a break, it always has to be with the body, right? If you're looking at market structure break. But also it's different because it has to be the body, but if you look at a 1 minute or 2 minute, then it will be a body. So what I wanted to say with this is that a lot of times we have this, you know, and it is true that once a resistance, we call this a supply zone, but once a resistance broke and retested, this will become support. So again, this is what comes back down to gambling and whatnot. Sometimes it does, sometimes it isn't, you know. So usually what happens is that the reason why resistances become support is because there was a big inefficiency here, a fair value gap that we can talk about. Let's talk about fair value gaps for a second. Let me find a fair value gap. So candles need to be interconnected. That means that they need to have, candles next to each other. So you have to have this coverage of the candles where the candles are next to each other at all times, right? So if you do not have this, that means there is no efficiency in the market. It's not an efficient move, and that means that there was only one participant in the market active, right? So if you have something like this, let me drink a little bit, guys. Sorry. All right, so when you have this, you don't see any candle next to this major, covering this major candle. You see, you don't see any candle covering this major candle. So that means that this is an inefficient move, imbalance on the market, right? By the way, I don't trade on the weekends, but this is gonna be a great trade. Okay, so there needs to be inefficiency in the market, efficiency in the market. So that means that you cannot have one participant driving the price. And this is what you see here. There are only sellers. There are no buyers here. It's only sellers. If something happens here, only sellers, price dumps. So these gaps in price is what we call inefficiency, imbalance, or fair value gaps. And basically what we say is that these gaps tend to be filled at least 50%, but usually they are filled fully. And if you know that these gaps has to fill fully, then you can position yourself in a way. So look at this, for example. Here's the beginning of the inefficiency. The gap comes up, fills, moves down. This gap has never been filled, so this is something that we have to look out for. This gap has never been filled either. So this, oh, look at this, yeah. It actually starts from here, so it doesn't fill it. Yeah. So basically what this means is that you have a gap here, for example, get filled. Same thing here. So you see all these gaps get filled. Here was this gap gets filled. So these gaps tend to be filled fully. And if you know that this gap has to be filled fully, you will need to, you can calculate your trades accordingly. And if there's liquidity, what we just talked about, building up below or above these levels, you can be sure that this is a great level to look for positions. Now, what I was saying previously is that if price moves, where do I have this drawing here? So if price moves on through a weak level, through a resistance level, which is actually not a resistance, right? Because this didn't break any zone, so it's also considered, you know, what is a resistance, what is not a resistance. This is not a resistance level because it didn't break. It's a weak level, so it's a high that needs to be broken, but it's not really resistance. So what you want to look for is that if there was a big fair value gap or inefficiency going through this resistance zone or going through this level, weak level, then that means that the price is most probably not going to come back down to the order block. What it's going to do, it's going to retest this high and then move on. Now, why does this happen? And this is the interesting part. The reason why it happens is because there are big players in the market, you know, for example, hedge funds. And what these guys do, they don't use stop losses, but what they rather do is that they hedge their positions. Now, hedging means you buy long and you sell short at the same time, right? So you sort of protect yourself either way. The problem comes when you have a certain price point. So let's look at this. You have a certain price point, and these institutions buy and sell at this level, right? So they go, or sorry, here. They buy and they sell. And then they say, okay, let's see what the price is gonna do. Let's see what retail does. Let's see what is happening, right? So they engineer the price to this level, and then they hedge their positions. So what happens is that when price pushes through here, they are in profit on their long position, but in loss on their short position, right? So they don't have stop losses, they only have manual stops. And because they are in the negative when the price moves up here, they need to get out of the position. How do they get out of the position? by driving the price down. If you notice, creating trendline liquidity, driving the price down for them to get out and break even or close to break even, just for them to trap retail as well on, oh, we're gonna, maybe it's actually even breaking like a major level, right? Oh, we're gonna break whatever retest, and then everybody's gonna sell, so they can offload their short position just to drive the price moving on. So this is one of the main reasons why this retest work. But also it needs to meet a lot of criteria. There needs to be fair value gaps. There need to be strong levels met. There needs to be the premium and discount zone. There needs to be liquidity built up and engineered just above the OB. There needs to be inefficiencies. Like there are a lot of things going into this, but I'm just trying to give you the high level picture. Okay, let me look at the markets to see what I'm doing, and then until then, if you have any questions, you can let me know. Thank you. All right, let's look at the markets. Yeah, so this is something I've been, look at this. So this is something if you follow my content, you know I've been calling for this level here, this exact level. This is the top of the gap, the beginning of the inefficiency. And I said we need to come and fill this gap. And when you fill this gap, we're gonna move down. I am expecting the Dixie for a while to come just below sub 100. But here's the thing, we have a massive liquidity building up here. So my expectation is that at some point we should go to 107, take this, and that's when I'm gonna go massive long on euro. So far I'm actually bearish on the Dixie, especially if the war escalates and whatnot. Then the money printer will go brrr, and that's not gonna be good. Let's look at Bitcoin. So I say, can we have a checklist? Checklist for, what do you mean checklist? Let me know what you mean. By the way, guys, just for this, like, what is the break? I think. So when we talked in the beginning of the session, we talked about price action and how the candle and all that aligns. And so what you want to understand is that everything is price. So you always have to use wicks. You always have to use wicks because if you don't use, my chart is. So if you don't use wicks, you don't see the whole picture. If you only use buddies, again, this is also different because I mean it's it depends, right? Because if you want to look at a high, for example, and this is my high here, this is my high level, and there's a wick going through, I don't mind that here, for example. This is what I said. This is called liquidity hunt, raid, in other words. This here goes through wicks. So you know that the body is the important, because we just take liquidity, also because on the lower time frame, this is trend line liquidity here. So if you go down 5 minute, 3 minute, you see this trend line liquidity. So the reason why it wicks out up here is because of that liquidity. So, but what I wanted to say is that you have to use wicks always, because that wicks represent a lower time frame price action, and you need to see the lower time frame price action to make a solid decision. You're going through a list in your head. No, so yeah, so what I do every day, I look at the economic calendar, right? So first of all, I go on Twitter. That's the one thing I do. That's the first thing I do, right? I go on Twitter, I look through Twitter, I basically, just see whatever that is. And then I go to the Forex calendar, economic calendar. I use Forex Factory, but whatever works for you. Then I have a profile here. You can set up your filters, what you want to see. For example, let's look at next week. So I'll come in here and I'll look at, okay, so claimant can change pound. If I have no idea what it is, because I'm not like, I have no idea. So some, for example, claimant can, so I don't know some of these things. So I just come down here and I know it's marked red. So that means I have to watch out if I want to trade the pound, right? And because it's in the UK, it can have major implications on the market. So I got to watch out for that. And then I just go, okay, in the euro, I have PMI coming in. Great. So I will not trade the euro Monday. London Open, I'm just not going to trade it because I know that there is something coming in here. So on London Open, we will see a lot of volatility. The French, in France, in Germany, whatnot, blah, blah, blah. And then I go, what's PMI in the UK? Whew, massive day on Tuesday, massive day. PMI in the States, PMI in Where is that? Oh, it's a global, okay. And then PMI in Germany, PMI in France, CPI in Australia. So then, anyway, so I look at this, right? And every Monday I look at this. This is also why it's worth following my content. But I look at this live, so I explain everything you need to know about it, and also I know how to plan my week. And then there are some weeks when I just simply don't trade. It happens. And then I usually look at Banter Bubbles, pretty cool tool. If you have not heard about it yet, gotta check it out. You know, you can come and you probably heard about it. Okay, but you can chat in the bubbles and see the bubbles. I just look at it and go, okay, what are the coins that are moving? What is interesting? Then for the show that I'm doing every day, I'm just, you know, it's just a cool tool to look at and see what people are trading or interested. Then I look at Twitter, and then I look at the Dixie, and then I just analyze. Okay, what is the Dixie doing? And because I'm a day trader, as I told you, I just look at the day. I look at the session. What was session liquid? What were the session liquidities? This is not right. Why is it showing New York? Oh, because it's not refreshed. Look at this. From everything you learned today. Yeah, it's gonna push. It's gonna push for this. It's gonna push. It's gonna push for this 107. Okay, so anyway, so I look at the Dixie and I go, okay, what is up with the Dixie? What is it doing? What are the liquidities? Okay, what are we looking at? This is what we're. But this is still not good. Why it's not up to something? Oh yeah, because sorry, closed. My bad. Okay, so and then you will have an update, right? You will have a gap or whatever that is. So then you go and then I look at the Euro USD, right? Something is not working with my charts or what? Yeah. So then I look at the Euro USD. Same thing. I tried, and this was a trade we took. Anyway, so I look at the Euro USD and then I analyze that. I see what I want to do on the day, and then I look at Bitcoin, and then I analyze Bitcoin on the day, and I figure out what I want to do. And yeah, basically that's what it is. That's my checklist. I hope this is what you were asking for. Yeah, so George saying that I don't use indicators. Yes, I don't. But I think the checklist rather was for the day. I don't know, maybe. Or checklist for each trade. I think is you have to find, like, I don't use any indicators. The only indicators I use is volume, because I think every indicator is lagging. So you see a picture that's already passed. So it's like you're just trying to make a decision when already the decision has been made, in my opinion. So it's very difficult, or it was very difficult for me to really be consistently profitable. It works sometimes, it didn't work sometimes, and I just realized, like, for me it doesn't work. And that's when I shifted. I use volume because that's real time, but that's basically it. So I want to tell you what I think about Bitcoin. I don't know who's next, but soon they will come up. Good morning. So I don't know who's next, but I know that they will be here very soon, in 5 minutes. So I just wanted to give you my thoughts on Bitcoin. So as I said, I've been long from down here. I think this was my entry. Sorry. And the reason why I actually stayed in this trade still, because I think this can be the beginning of a rally, like a big rally. This level should hold. This is the 15-minute POI, or is it? It's the 1 hour POI. Sorry. So it's the 1 hour POI. I think this will hold. I think we're gonna see a retest. We manufacture liquidity now, engineer liquidity now. What I've been talking about. So I think and we do have liquidity for us to come down, touch onto the beginning of the inefficiency, fill the gap that I have been talking about. If you go down the lower time frame, you will see there is this gap. We need to fill that. So we are going to come down here, touch onto this 29,255 region, and then move on. This is my expectation. There is some liquidity down here, the trend line liquidity. This is why I put my stop loss below this low, because this should not get broken. If this gets broken, I'll shift my view, and I'll get bearish and potentially short from this area when that happens. I hope it helps. If there's any coin you want me to look at, let me know. Yeah, I would expect this to come down here at some point. This would be a good entry. Since when did I change my trading style, and how big for it was the impact? Yeah, sure. So I basically I discovered that I've changed it about 1.5 years ago, I think. You know what? So I was in a state where you make money, but you don't make money consistently. So I have very good months and I have very bad months, and then eventually, you're in profit, but it's like it's not like a business. For at least for me, it wasn't like a so to say a business where I can say, okay, next month I'm gonna make like 10 to 15%, and then I'm good. It was really like next month I'm gonna get 35%, and maybe this month I'm gonna lose 25 or something like this. So I'm still in profit for I've been in crypto since 2016, so I've seen some stuff, but consistent trading was something that I was still after. And then a little tweak here and there, and with the understanding of the markets, you just have to find, again, like the strategy, right? So you have to. I was looking at the markets completely wrong, to be very honest with you. So and I think every professional trader gets to that point where you realize like the whole thing is not what I thought it was, and you start looking at it completely different, and that's when the world starts opening up. At least who I talked to went through this process. And also, I just want to plant a seed. And then, David, I don't know how long I'm going for. I'm very happy to do it, but I don't know who's coming or what. But I want to plant a little seed here, and that is 98% of traders lose money. There's a 99-90 rule. 90% of traders lose 90% of their capital after 90 days. Within 90 days, depositing to their account. So if this is the case, that means that the only thing you should do is to not follow the herd. Like that's what you should do, right? I mean, it's just simple. Like if 98% of people lose money, you have to be the 2%. And that means 2% means doing the complete opposite what the 98% doing. Now, if the 98% does one thing, then you have to start thinking, am I being part of the herd and therefore being part of the 98%? Or I am the 2% that actually makes money. You know what I mean? So this is what you have to think every time when you look at a strategy or whatever that is. How many people understand it? Because if everybody understands it, most probably everybody uses it, and most probably everybody or most of the people are not consistent with it. Or you have a, and this is also why backtesting is very, very important, because you can have a very good strategy and basically you just backtest that strategy, and if that strategy works for you, then you execute on that strategy. You can trade, and you have to see yourself, right? So you have to see, maybe you're a day trader like me, maybe you are a position trader, maybe you like to hold trades for months and weeks and whatever that is. Maybe you want to trade 2 times a week, 2 times a month. It's all on you. It's all on understanding what you want to do, and then finding a strategy that works for you in your terms, in your vision of how a trader. I like the fact that I wake up, I do London Open, I do my show, I do the analysis, I take a position on London, I write it on New York, and I'm done. Sometimes I even write it on London, and I'm done for the day. Like, I don't need to sit all the time, and as an addict. Also, this is as a gambler, look at the charts all the time. I've been through that. Look at the charts all the time, trying to take trades on weekends, at nights, and whatnot. No, you don't need to do that. You have to trade. If you are a healthy, a lot of us get caught up in work, but like if you have a decent work-life balance, you don't sit in the evening when you're at the dinner table and writing a company report. You don't do that. Why do you look at the charts then? It's a job, and if it's a hobby for you, that's fine. But then just know that it is a hobby, and you do this for the adrenaline, and you do this for the feeling of placing a trade, and then you can just go and play roulette as well, or whatever, that blackjack, because it's the same feeling, it's the same adrenaline, it's the same everything that you're getting. The sound simple things are the most difficult to achieve and realize. Case is asking, apart from David, has anyone been all day and all the time and has not slept yet? Let us know, guys. Good morning from Malta. Sorry. Yes, indeed. Health, wealth, and knowledge. Self-learning so much. All right, guys, let me know if I should look at any coins. We've been going on for an hour now. Let me know if we should look at any coins, or I should show an alpha. I can actually do some charting. So Bitcoin dominance, we can talk about that as well. So Bitcoin dominance, I am expecting Bitcoin dominance to go to 56%. This is my vision since we're done. Oh, Thales is up here. We don't hear you.
Good morning.
Good morning.
You can't hear
I
me.
do. Now I do.
Okay. Good.
Good morning.
How are you?
Morning.
How you doing, brother?
Good. How are you, man? How's everything?
Yeah, not too bad. I'm losing a little bit of my voice. I sound a bit funny. I started losing my voice since yesterday. It's getting worse by now, but I'm doing good. How are you?
Yeah.
Did you trade anything today? This morning?
No. I'm not. It's the weekend. I'm in
I
a
know.
Bitcoin long for quite a while, and I actually added to my position yesterday, but
Okay,
no, I'm not trading. I'm a it's a free game. It's a free game. I'm just
sure.
risking my profits now. I'm expecting that big weekend fake out on tomorrow. If that happens, that will be good.
Yeah.
Cool, man. Have a
Okay.
fantastic session. Take it home,
Thank
guys. Thank
you.
you so much for being here and spending this hour with me. You know where to find me, and see you around. Dallas, have a fantastic session.
Have a good weekend, brother.
You too.
Enjoy.
Take care. Bye bye.
Thank you very much. Bye bye.
Oh, I put myself up.
That's cool. Good morning, guys. How are you? Let me fix here all the windows. I apologize for my voice, guys. I'm losing my voice. Um, how we all doing? Let me see a little bit of the comments here. What's going on? Morning. Freedom is back. Yes, I am back with a broken voice, but never mind. I'm here. I can't miss this for the world. I'll do everything to make sure that I'm going to be around for you guys. Good stuff. Good morning, Shauno. Good morning, everyone. Okay, let's have a look what's going on. What are we going to talk today? We're going to talk a little bit about our enemies, right? Again, I apologize for my voice. It's getting. I picked up something from my son. My son was sick a couple of days ago, so it's my turn now. Right, okay. How are we going to control our enemies? Right, I've got some morning music going on so we can wake up, alright? It's Sunday morning. Hello, Banter Bubbly. You've been here non-stop? I'm good, just woke up. Good. Mm-hmm. And Liam Beard, that will sort out your voice. Good, yeah. Love the graphics. Thank you. Yeah, I mean, I play around. I like to be visual, right? This is trade hunting. We do that every Monday and Friday on Discord, right? And I'm gonna look out for trades with you, right? So instead of me talking to you about the theory and how we do this and how we do that and theoretical, I think it's um, more giving to you guys actually seeing me doing the trade, right? So it's enough of talking, let's go into actions and stuff like that, yeah? In that kind of aspect. Um, right, controlling the enemy. Who is the enemy, right? Who is the enemy? Who knows who's the enemy? Who's the biggest enemy that we have? Who knows? Today's the 21st. Right, good, Sunday. Right, who's the enemy? Yeah, they're always around. They're all around. They're here already. Μια χαρά, κάποιος ξύπνησε τώρα. Yep. Εγώ δεν ξύπνησα τώρα. Sorry about my Greek. Someone, I saw a Greek comment, so I answered back in Greek. I've been up since 6 o'clock this morning because I needed to make sure that I prep other stuff for him as well because my son, he has a cycling event today, so I had to pack the bicycle on the car and stuff like that, so I've been up quite early. I am the enemy. Yes, cowards, you are the enemy. We are our own enemy, right? Look, that's correct. Cows dog, ourselves, that's correct. We are our own worst enemy, that's correct. Right? So, ladies and gentlemen, my dear friends, we are the enemy to ourselves, right? Because it's the way that we operate anyway, right? So when we see the charts, um, automatically your brain will see the colors, the direction, the distance, right? The angles, if they're very sharp moves, and then automatically, without you knowing it, right? Your emotions will kick in. And you're like, oh, I missed it. Oh, look at that. It's bad. Oh, it's good. Right? Oh, look at this. Look at that. And this is emotions kicked in already, right? From step one, number one, without you realize it. So that can affect our approach and our, let's say, find our levels and get our entries, and it's messing up with our brain. And that is nothing wrong. Everyone is doing that, right? Everyone is doing that. It happens to everyone, so don't feel bad about it. But that's why I come here to you to speak to you, and we're going to have a conversation about this. How can we control this, right? And I'm going to go really a little bit quickly into this because I see a lot of people, the same people around here. So I'm going to give it a chance for the new guys that they haven't seen this before to talk about it, and then I'll try to finish what I left behind yesterday, right? Because Nick was on a different session. He didn't realize that I didn't finish, and I wanted to come and say goodnight to you guys and stuff like that, but it's all good. It's all good. I'm not going anywhere. We're going to have these sessions every week, Mondays and Fridays, and plenty of time to do these things again over and over, and then you can ask me things. You are more than welcome to ask me now if you got anything in particular in your mind, right? Uh, Now, for us to battle the big emotion, our enemy, we need to zoom out, right? And maybe you want to go into weekly. Let's, pull ourselves back and say, okay, let's have a look. What's going on here? What is going on? I can remove these yellow warnings. We can put them back later. No worries. So you zoom out a little bit and then you see what is going on. I said, okay. Overall, I know that Bitcoin it's an uptrend, constant uptrend, right? As a general overview, we're on an uptrend. Obviously, we're going in waves. We're going up, correction, goes up, a little bit correction, goes all the way up, some correction, goes up, what I expect, some correction on the way down, right? So when you zoom out a little bit, you get it to gain a little bit more control of what's going on. Where do we find Mondays and Fridays? On Discord. You are part of the family, so I assume you have access to the Crypto School Discord server, right? Where the sniper courses are and the whale courses are, and this is where I take, a slot on Mondays and Fridays. I do 9:30 in the morning, my time zone, which is UTC +3, right? Next week we're gonna shift time zones, so it's gonna be like UTC +2, but it's like half an hour before the European session. So I open up the charts quickly, have a look what's going on, and then we are preparing by the time the market is going to open to see which way they're going to move, right? And we try to grab some trades. And you're going to see me trading live. You're going to see me actually taking entries, right? Plan the trade and then take the trade, right? This is on Discord. And maybe I'm going to host it on YouTube, right? Maybe, I'm going to connect Discord on YouTube, and then I'll leave YouTube open for people to see. These sessions are so well, they're getting better and better, right? They're getting better and better because it's a big distance between theory and actually doing it, and I feel that people need to see how we do things. So if you see me do it once, twice, three times, then my target is for you to feel more confident and get into it, right? It doesn't matter. You're gonna see me. I'm gonna take small trades. I'm not gonna go in with thousands. I'm gonna do like 50 euros or $100 or something like that. Very small amount, right? I don't want to scare you or panic you or anything like that. We're trying to battle emotions, so we're gonna use small amount of money. That it's a process that we're gonna start with small money because we don't want the money to attack our emotions. We're gonna keep the emotions outside of this chart and outside of this room. So we're gonna zoom out. You're gonna see me how I'm approaching. What charts do I see? Because what do I want to look? I want to look at the cash flow. Where is the cash flow moving? I see Bitcoin still moving on the weekly. Okay, good. I go to dominance. I can see what's going on with the dominance. It's still trying to push a little bit, losing out the steam a little bit there, but it's trying to push, right? It's an uptrend. You cannot ignore that, right? And you can see the angle. What's the angle? 49, 50 degrees, right? 50 degrees is a little bit sharp, right? Not crazy. Remember, the ideal number is 30, right? And up to 45. We usually say 35, 45, right? But I can look up to 30. 30 to 45 degrees. It's a very nice, healthy trend. It doesn't matter if it's an uptrend. It doesn't matter if it's a downtrend. Anything between 30 to 45 degrees, it's gonna be a healthy move. We don't panic or say, yeah, it's good. It's like in a nice corrective manner. When we say corrective manner, what do I mean by that? What's that? Chat? No, it's alright. I don't want you. So the corrective manner, it's going up a little bit and then doing some correction, goes up, then some correction goes up, some correction goes up, some correction goes up, some correction. So as long as you have nice corrections, right, you're gonna have nice angles. If you don't get proper corrections, what's gonna happen? It's gonna go up, very small correction, and then goes up, very small correction, and then goes up, right? And that will lead us to have a very sharp angle, right? And you're gonna go like this and say, look, 64%. 64 degrees. It's very too steep, too sharp, right? And we know what's happening when things going up very fast. They do what? They go down very fast, right? So if we identify angles like that, it's like, okay. Now, T1, you can see the T1. What's going on? Is the money coming into the crypto space? What is Total One? Total One is the whole crypto space. Bitcoin, Ethereum, and all the miners together, combined, right? Dixie. We love watching Dixie. Let me zoom out a little bit. On the 4 hour. Why do we love looking at the Dixie? What is Dixie? Dixie, it's the currency of the dollar, including other little bits and bobs, right? But basically, it's the strength of the dollar. So when dollar goes up, right, Bitcoin goes down. And then people are going to ask me, how do you know this? How do you know that when Dixie is going up, Bitcoin's going down? I'll tell you exactly why. You see here, what does it say? It says Bitcoin index, right? Now people will not understand what is index, but look here on the left. It's Bitcoin, and guess what? US dollar. So this chart, when it's going down, is telling me that Bitcoin is losing value against who? Dollar, right? So let's go back to Dixie. Dixie's going up. Guess what? Bitcoin's going down. Dixie's going down. Guess what? Bitcoin will go up, right? So if I see for this instance now, right? I know that the markets in the US now are closed. It's Sunday, right? But for the past week, what do we see? A little bit of a range, don't we? Right? It's going up, goes down, goes up, goes down, stable, right? We had a small down move, push to the up, and then after that we go in range. So Dixie right now doesn't move. So now let's go in the 4 hours, the same time zone, like the time frame, right? Now we see that Bitcoin is moving a little bit, right? While Dixie is doing stable things like sideways. Good morning, Terry.
Good
Right?
morning, Thales.
How are you?
Shame, Thales, your voice sounds like you've had better days.
Oh, I know, I know. My son got sick a couple of days ago, and I didn't take him to school, so he was here with me at home, right?
Okay.
So I think I got it now. It's my turn.
I hope you've had
But I tell
lemon
you,
and honey tea because that will help your throat.
true, true. Right now I'm having a water with some amino acids to help my body to stay up strong to fight whatever bug I have, a virus, whatever it is.
Oh dear. Well, I've got
Mm-hmm.
that voice just because I never wake up so early. But I thought
Mm-hmm.
I'd jump on. I have got somehow somebody said join me this morning, so I thought I'd jump on and say good morning, everybody. I like the chill and chat in Discord because then there's no camera, you see. So
Mm.
um, at
Mm.
least I'm not in my nightie, guys.
No, it's good. It's good. You're looking fantastic.
Thank you, Thales.
Um,
So what are
and
we talking about? Morning,
we're
Simon.
talking about how to fight our emotions, our demons, right? And our
Oh
demons,
dear.
it's exactly, it's the one of the worst the battles that we have to win and we have to
Yes,
master. And one way to master this area is that we need to zoom out a little bit and look on Bitcoin on a big scale and see, okay, what's going on, right?
yes,
We can bring indicators. We can compare our charts with other charts like Bitcoin, dominance, Total 1, Total 3, Dixie, so we can understand a little bit where the cash flow is going.
yes.
If I can, I mean, let's say, I mean, I'm looking at Bitcoin, it's pushing, okay? For the past hours, it's keep on pushing. We
Mm,
all see this. Okay, it's pushing. Why is pushing? Is it because of, let's say that Bitcoin is going up? Is it because of the value of dollars going down? Or is it actually someone is investing in Bitcoin, right? And how are we going to identify this? We're going to identify if the total market cap is moving as well. If total market cap is moving towards up, it means the cash flow comes into the crypto space, right?
yes.
We found out that Dixie is doing a sideways action, right? It's a sideways action, so we know
Okay.
that Dixie is stable and it doesn't affect the Bitcoin price. And
See,
then
I
you go
call
to
that the sideways shuffle, Thales. I have my own names, like when you
mhm,
go dancing. And you
yeah.
know that when I started trading, every time I put into a trade, all of a sudden it did the sideways shuffle and I was in red and I was in green and I was in red and I was green. And we quite a loud family. We've got double stories. And I'd go, no, 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 you're going the wrong way. No, no, okay, thank goodness. And my boys would laugh at me and they go, oh, mom's in the trade again. It's doing the sideways shuffle. So we all understand that when we take in the beginning. I
Mhm.
think that I've been obviously trading a little while, and I don't have such long sideways shuffles, and sometimes I even miss it, which is quite
Mhm.
interesting. So the more you trade, guys, and you understand the markets and things, and the more you listen to Thales, I jump on with Thales, and then I listen to him in the AMAs, and honestly, it's to take your stress level down, as Thales talked about the emotions. Learn how to read it so you don't have to do that screaming that I did. No, yes, no, yes. It was very emotional. So sorry, Thales. Let's keep going.
No, 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 no. It's absolutely right. I mean, a lot of people, especially, newbies, when they start trading, they have no clue on what are they looking at, and they have no clue, what to understand and how to see things.
Well, I must say the
Uh,
students are very lucky because when I first started trading, it was before sniper course, and all
mm,
I knew was buy when it's red, sell when it's green. So if I went on and I saw one candle was red, I'd go in. I didn't know where in the cycle it was. I hadn't a clue about horizontals. I knew about a trend line, but so for me, I would just jump in because it was red. And
true.
with sniper school, honestly, and with listening to the different traders, that's the way that we really learn and we pick up new skills. And it's much calmer once you know how to trade without all the emotionals, ups and downs. And I tell you, the other thing that I did in the beginning, which I'm sure some of you can resonate with, is I never used a stop loss, and that was stressful, honestly. And
Yeah,
liquidation happens. You don't think it's possible, and it was. I mean, AVAX and I, we're just not friends at all. I've said it before. It's like that vodka when you're 19 years old and you drink too much. I look at AVAX and I scroll past and I move to an next token because of my stupidity in those days or my lack of risk management. So when I use the word stupid, I don't use it in a derogatory term. I use it in a term of I did not understand. Because if
yeah,
you're stupid in a subject, it means you don't understand the subject. But
mhm,
when you understand it and you then don't use it, then you become a gambler. And
mhm,
honestly, we must not be gamblers in this space. Rather than go to the casino up the road, do the whole casino vibe thing. But as traders, we're learning to actually make a living or we're learning to make dinner money or a holiday money. But let's do it without gambling. Let's do it with proper risk management and actually making money. Um, if we were listening to Chris last night and he said that he's able to travel off of his trading.
mhm.
And I think he said, Thales, you might have heard, I think he said he wins one trade out of five. So that shows you that his stop loss is spot on. Um, because if it wasn't, he wouldn't be coming out with profit,
It's
you
true. I
know.
mean, in general, um, what I would like everyone to have a nice little target, right? For the newbies, I want you to win 3 trades out of 10, right? And everyone will say, "You mad? What are you talking about? 3 trades out of 10?"
Yeah,
Yes, this is all you
yeah,
need. 3 winning trades out of 10, right? That's the
exactly.
first number. The second number that we want is that your ratio, right? Your trade ratio is supposed to be 4 to 1, your targets, right? So you're risking one part and you're going to win 4 parts of the trade, right?
Yes.
That has to do with your stop loss, right? And your take profits. So if you do these two, let's say numbers, I'm telling you, even with 3 winning trades out of 10, you are going to be profitable. And
Yeah.
people, newbies, when I started, I had no idea what risk management was. What was
Exactly.
the triple R's? I love the triple R's. And people would ask me, what's a triple R? Yeah, it's like RRR. What is it? Right? It's the risk reward ratio. Risk reward ratio. Triple R's, right? It's
Reading,
very important.
writing, arithmetic. It's,
Right.
those we have that. Now we're moving to this into the trading.
Yeah. So minimum,
Alice, I have to
minimum.
just read this one comment. It says, I'm optimistic that screaming on the charts don't have any impact on them. Just a feeling in ultra rational business. There's no rational business when you're trading, guys, and you're not using risk management.
Yeah.
Screaming helps. You're like, no, no, it works. I'm telling you, it makes you feel much better. So
It
the
does.
three
It
R's,
will
Alice.
release all that, that energy that's coming up from the chart and say, you're
Exactly.
screaming at it. Yeah, I know. Screaming doesn't affect it. Yeah. It's not a it's not a magical tool, but yeah. Um But yeah, I mean, we got a little secrets left, right, center that, especially for the new guys that starting on trading, that had no idea. And this is
Yeah.
why we come into play and say, listen, grab this knowledge, grab that one. Let's put it all together and let's make a nice strategy. Let's make a nice approach. Let's make a nice target. Let's make a nice, it's like your own, when you're going to trade, it's gonna be like multiple things. It's like when you go to a job, right? You've got multiple tools, and you're gonna use the right tools for the right moment, for the right part of the job. It's exactly the same thing with trading. So you need to understand that you need to zoom out a little bit, calm down, breathe, right? And then
Yes.
said, listen, yeah, you need to breathe. So I said, listen, I've got this under my control. And how am I going to do this? I'm going to look on other charts, zoom out a little bit, what Bitcoin's doing. Oh, all right. What's dominance doing? All right. They're looking equivalent, right? Bitcoin's going up, dominance is going up. What does that tells me? It gives me the information, real-time information is right there on the chart, on the screen. It's a real-time information telling you that Bitcoin is dominant. It means it's a major token that is moving into the market, right? So okay, good. T1 is going up, so I know cash flow is moving into the crypto space. Dixie, what is doing? Stable, it doesn't move. Okay, it doesn't affect my price. So if Bitcoin is moving, it's a genuine move from investors, right?
Mm.
Buying or selling. You can have um, another chart that I like to see, which
Yeah,
is
Thales.
stable. Yeah, go for it.
So Thales, with that, we know,
Hmm.
which we haven't spoken about for a while, is that the market has a cycle. It's Bitcoin first, then Ethereum, then the large alts, then the small alts.
Yeah.
So what we're looking at, I would think, considering the alts that we're looking at are at all-time
Hmm.
lows, which
Hmm.
is a really good time to dollar cost average in, which Thales did with you guys on the AMA this week, which was fantastic, by the way. So I'm presuming we're still in the Bitcoin dominance phase. So looking at Bitcoin's always a good place to see where we are. So there is a cycle. I know that Rand used to speak about it a lot when we started listening to him. There's that Bitcoin, Ethereum, major alts, minor alts. And then, of course, you've
They
got
take turns.
they take turns. And then you've got the chaos coins, the chaos
Hmm.
tokens, which are, um, they're little tokens that are brand new to the market, that have potential, that are cheap as chips. And honestly, if you can buy 100 and only one will pump, but that's just on a different level.
Yeah.
So I just wanted to pop that in. I'm also talking more than normal because I know Thales's voice is sore. So I hope you don't mind the
I know.
feminine voice this time. Thank you, guys.
No, I appreciate it. I appreciate for jumping up and helping out a little bit. I was start losing my voice yesterday, so I did give the heads up to the team. I said, listen, guys, I don't know what's going to happen in the morning, but if I go in the same direction I'm going to lose it.
Yes.
So I'm very
And
grateful that you're here at
and
this
and
time. And
Thales,
I know that it's earlier. Your time is earlier than mine. So it's
yeah,
8:30 my time. It's 7:30 your time.
it was.
It's
And
brutal for Sunday. Look at that.
it's Saturday, Thales. It's Saturday.
Is it? I've lost
Yes,
it. Is it? It's
yes,
Saturday. Oh
it
my
is.
God. Thank God that it's Saturday. All right.
and and if Chaos keeps giving cheeky comments, then I'm going to pull him up onto stage. I'm just saying that.
Yeah, bring him up. Come on, Cows, come up.
Yes, thank
Mm,
you. And guys, as Banter Bubbly says, smash the like button. Come on,
mm.
do it
Come
for
on,
us.
guys. Let's do
Okay.
this. Right. So I was talking about stable coins dominance, the dominance of the USDT, which is one of the major stables. And I see that it's dropping. Can you
Sorry.
drop your cup of tea?
It was planned right at the time you said dropping. Just saying.
We got the sound effects. Good stuff. I love it. So now you can see that people moving away from stables, right? So your theory, your understanding that people are moving away from stables and they're going into crypto. Cash flow is going into Bitcoin. You see total market up is going up. Dominance is going up. Then you understand that the major token, the cryptocurrency, Bitcoin, it's moving, right? And this is how you control it. I said, okay, now I know. Now I understand. You don't need to go to Twitter, X, TikTok, Facebook, WhatsApp, Telegram. You don't need this, right? It's good for social, it's good for fun, but you don't need to see where the cash flow is moving. All you need is the real-time information, which is right on the charts. Now, if something happens, like all that huge spike, right? And we had that on the same thing on Bitcoin, right? And you're like, what was that? What was that all about? Why all of a sudden? It's going to take you hours, right? I mean, I know that internet is fast and information is traveling really fast, especially bad news, they're going super fast, right? And you're going to find out in a matter of hours. But it's very hard for you to filter down the information. I've read this source, like Coin Coin Telegraph, right? Let's take this as an example. You knew that Cointelegraph was sort of a decent source. All of the articles were there, they have their own character. It was updating every minute there was a new article coming up. It was like really busy, right? A lot of people use that as a source. Now they just made a mistake, maybe. They did that deliberately. They wanted to do, they wanted to give out an article, but it wasn't confirmed. It was like 50-50, right? Anyway, that triggered the market. But it's hard for me, even an hour later, and say, okay, is this because of the wrong article? Who's going to tell me for certain, 100%, that pump, it was because of that coin telegram? We assume that it was, but we don't know if it was, right? So, it's going to take a long time for you to get the information. By the time it's happening, right, this happened here, you're going to find out later when it's going to come down. And everyone will be shocked and like, what? We just witnessed right now. What happened? And secondly, you've got all these people panicking, right? And they're going to start tweeting. And then you've got like thousands of them, like articles popping up. Oh, this happened because of that. This happened because of that. And you're trying to guess now which one is the real one. So, to my eyes, and that is what I'm talking about myself right now, I don't waste my energy to try and dig, right, and see why and how I'm going to be sure if this is going to be the right information that correlates with this price action. Even now, I don't know. Days later, I don't know if that was the.
And the reality is, Thales, is that if you are doing your risk management correctly, those big wicks, yes, on the odd occasion it might wick you out. But if you've got your risk management in, you will be safe. So if you had been, you can see the market was going up. It was on an upward trend when it spiked. So if you had been reading your TA correctly and you had done your horizontals, your trend lines, etc., you wouldn't have been in a place of being wicked out. And if you had, because you thought it was changing by the sideways shuffle there, you would have had a stop loss in. So in the beginning, when Sheldon was trading in the bull market, he literally spoke about TA. He didn't know, he wasn't looking at the fundamentals of the market at all. He only did TA, and he made his money over just using TA. So the only way you can do that is by having risk management, because otherwise you better have medical aid or medical insurance, I'm telling you, because your heart will stop, especially in a bull run. So, guys, it's even if it spikes, as you can see, it was an upward or whatever. If you've got your stop loss on, you will be safe. You'll just lose a certain percent. And if you follow Thales' strategy, it's a 2%. He's spoken to you about how he does his leverage according to that. If you guys are doing whale school, I think Kyle speaks about up to a 3%. Every trader has their own strategy and their own way of trading. So what we at school are here to do is to show you the basics. Sheldon's trading, now Kyle's trading, or both, or whatever you're doing. And then we've also got our own way of trading. So Thales is going to say, this is how I work out my leverage. And I'll be honest, I hadn't heard anybody speak about working out a percentage of your stop loss, making your leverage. So it's a very good way that Thales does this. I'm sure there's other traders that do it. But as Thales said, I mean, I'm not watching, I don't go onto many YouTubes to watch other traders. There is one other person I watch. I'm not going to put it on the stream here, that we watch. But you need to come up, are you happy to risk 5%? Are you happy to risk 10%? Because that to me, I mean, if you got $100, 10% is $10. That's 10 booms and you've got nothing left in your portfolio. If it's 2%, you're dropping a 2% here, possibly at 2%, but then you're going to get a 20% or 17%. So that is where you've got to make it. And I can tell you, I should have planned it here. If you have a book or you write down your strategy, you actually plan where you're going. I mean, Thales knows I've got a book and I've written down where I'm going. I've got a plan, and you stick with your rules, you stick with your plan. I've got my trading rules, and wonder where it is, if I've even got it here. No, I've got a couple of books. So I've got 10 of my rules and I stick with them. If I don't stick with them, oh my goodness, my trading just booms down. But you've also got to have a plan forward, because if your plan is financial freedom, that's a great plan, but you're not going to get there. And how can I say that? Well, because what are you doing to get your financial freedom? Okay, so I've got $100 because that's what I joined school with. Now I need to make it $200. How am I going to do that? How long must I take to do that? Okay, well, if you do 5% a day, within a month, you've doubled your portfolio. So now you've got $200. Okay. And then you say, okay, so I'm actually wanting to get a $400 because I need $400 to make X amount. Then you work, okay, I'm going to go from 100 to 200, from 200 to 400. And that's how you're going to work it out. So in 2 months, you're actually at the $400, which seems to be a number, because that's what Sheldon was going to take $400 up to $1 million, which we couldn't do because we realized that the following was too big. And once you've done that, okay, so I need X amount in my portfolio to make, let's say I want $50 a day. Work it out, write it down. I like to write on a piece of paper. I've always got a book next to me. You can see, can you not see? No, blue screen, sorry guys. But I've always got my books with me, and I've got 3 or 4 different books, and you put it down there and you write it down, because physically it just does something to the brain that you know, okay, I've written this down. Put it on your computer as well, but have your paper there, you know, and set that, and then have your steps, and then tick it off as you do it. Tick off your steps that you are doing. And this is the only way that you're going to move forward, because financial freedom, really, I just lost, I had $100, now I'm at $50, but it's okay, I'm going to get financial freedom. Okay, I took another trade because I didn't use my stop loss. Now I'm down to $20. Okay, so now you're down to $20. Now you've got to trade up. What's it, 400% or whatever it is? Kyle's got the charts in his school. So without a plan, you're not going to get there. It's the same thing as I want to go watch a movie, The Big Fat Greek Wedding 3, for example. How am I going to get there? Okay, I need to say to my husband, do you want to go to a movie with me? No? Okay, I'll ask my girlfriends. Okay, so who's taking the car? Okay, I'll go with Ursula. I'm going with my husband. Okay, boys, we need the car. You have to do your planning, because if you don't, you get there and my eldest son Caleb's taken the car, and I'm like, oh, but I was going to a movie. Yeah, but you didn't do your risk management. You say, guys, I'm using the car tonight. It's the same thing with your portfolio. Okay, I have $100. Okay, I've dropped 12 trades. What's going on? Check my journal. Well, I haven't been eating properly. I've been eating junk food because I'm too busy in front of the computer. I haven't made a proper meal. My fats in my diet are non-existent because I'm eating carbohydrates. Step away. Go make yourself a proper drink. If you don't want to make a proper quick drink, make a smoothie, put some coconut oil into it with your green veggies, whatever it is. Go get a steak if you want to have a steak. I'm here for the meat eaters and the vegans, whichever you choose. We're not doing that debate on the screen. But understand that if you are standing in front of a computer, you're going to lose all of your finance that you are working with if you are not feeding your body properly, if you're not exercising. You need to go get the oxygen. Once you've done that, set aside, wake up. And if you're not waking up early enough, you need to jump onto, then wake up an hour earlier. Okay, and then have your book open or your piece of paper printed and put on the wall so you know what you're wanting to achieve. And step by step, go into that. Once you've got that, then you start looking at the charts. But without a plan forward, what are you doing? Okay, the $100 is to learn, it's your school fees. Fantastic. That's great. Jump on with Bruce and Max and do little scalping trades because they're going to learn. You're going to learn very quickly with a scalping trade. Jump in with the AMAs. But once you've done that, what is your goal? My goal is to repair my car. The goal is to buy myself a pair of glasses because I'm blind as a bat. My goal is to, whatever it is, buy a house. Write it down, have something to work towards, and then you will go far with it. Thales, I think your croaky voice is gone. You can take over again.
I hope so. Yeah, guys. I mean, for you to battle the emotions as well is part of the plan as well. You need to plan things, and you're gonna put your targets there, and you need to get a group of targets: small target, medium target, big target. Maybe your big target is gonna be your retirement, right? And I don't expect people to be over 60s for them to get retired. I would like to see people over like in the 30s or 40s and say, listen, I'm ready to retire.
Yes.
So maybe this is the big target, right? What is the medium target? Maybe I want to buy a house. Maybe I want a holiday before, I need something for the family, or a car, something, right? Because we only got one car and everyone is jumping on the car. And if we don't plan it, we lose the car, yeah? Because someone wants to go to the cinema, right? So, exactly. So, right. So, and the small targets, the small things is like, can I have my 5% per day? You need to make sure that you write them down, your goals. This is my big goal, medium goal, small goal. That's the first thing. The second thing, make sure that the small targets are going to be reachable very quickly. 5% per day. This is all I need, 5% per day. If you do that 5%, if I do the numbers here very quickly, because I'm going to lose my voice. 5% per day, right? Look at how you put the numbers there. You do that by 20 days in a month. That is Monday to Friday, excluding the weekends. Weekends is time for you and your family and your friends to have a good time, right? If you do that Monday to Friday for 20 days, you are doubling your account within a month. Right. So if you started with 1,000 on this month, you're going to end up with 2,000 now. You're going to double your account. If you're going to start with 5,000, you're going to end up with 10,000. You get the idea. All you need is 5% per day. That's all you need.
5% is achievable. I made 7.46% doing a scalp trade with Bruce on Wednesday night. And honestly, my stop loss was very little. If you get your trade correctly, it was maybe within 5 minutes, I was at break even with my stop loss. So if you're doing your TA correctly, 5% is really, really achievable. But guys, what you can do is if you just Google a compound calculator, okay, and take $100 or $400 as your starting. Work out 1% per day and see what happens to that in a year. Do that with 2%. Do that with 5%. Go and have a look what $100 does in a year. Then look at $400 or whatever your portfolio is. I talk $100. I'm in South Africa. Our currency is just not like the rest of the world. So for me, $100 is where I started. Work it out. Thales, what did you do it? I heard you clicking. Were you able to do a compound calculator 1% on $100 in a year, or didn't you do it? Am I throwing
No,
you under the
I
bus?
didn't do it. No,
No,
I
you
didn't
didn't
do
do it.
it.
But
I
you
do
guys
other
go
things
do
in the
it.
background.
Yeah, you guys go and do it. And then I'd love to see comments on Discord about how shocked you are at what 1% compounded interest does to your portfolio. And a 1% is easy. But if you're doing a trade, you're not going to aim for a 1%. You need to aim a bit higher because of your trading fees. So you're looking at a 2-3%, and that should give you your 1%. But again, write it down, plan it, have a look at the compound interest, and you guys, I'm sure you all know how to use the trading tool, the risk to reward tool on TradingView, where it shows you what the percentages of the trade that you're looking at, and start playing around. Now, unfortunately, I need my sleep, so I missed Nick doing his chat, and I think he did back testing. And I think that that's something that you all need to go and watch, and you need to do your back testing and play with the numbers, play with the percentages of the token that you're looking at, and you can see, okay, this one's only doing a 0.5% move, but let's just say, for example, but then Atom's doing 12% moves. Okay, but HBAR is doing 27% moves. Then you're going to look at that's the token you're going to trade in. So look for a token that trades in the moves of the percentages that you're looking for. And don't only go for the token that does 112% moves, because that's fine, but then understand that you're not at $100 in your portfolio. You've obviously got $1,000 and you've got a short-term trading account. You've got a medium term and a long term. Because if you're looking for those 112%, you're probably looking at a swing trade or you're looking at a long-term trade, which is great. But where we are at school, we've got $100. Let's try and build that up. And so within a month, 5% a day, you're at 200. And then the following month, you're at 400. And I'd love to see your comments on Discord, because that's where we communicate. That's where we are for you guys. So what have you got on the screen there, Thales? What are those numbers you popping up?
Okay. What I have here is the indicators that you can see on the weekly. This is Ethereum, right? And you use the indicators to give you a little bit of understanding what's going on and what you can expect, right? On the larger time frames, these indicators have less noise, so the readings they're going to give it to you are a little bit more lagging, but they are very heavy, so to say. They don't get easily manipulated by the daily price action, and that it will give you more understanding and say, okay, you know what? Ethereum is on a downtrend. I can see that, right? We know that Bitcoin moved, but Ethereum is on a downtrend. ASO is telling me that the down move is dominant right now, right? And what I'm waiting for ASO to pull down, right? And then I know that will indicate me the bottom. Maybe it's going to be here or maybe it's going to be there. I don't know, but I know when ASO is going to turn around, it will give me an understanding on when the price action is going to be around this zone. It's going to be the end of the down move, right? It's the end of the down move. And then you can plan and say, okay, look what the stochastic RSI, right? Stochastic RSI, we have a cross down and we are around 25. So it has more room to come down. So I say, okay, I'm watching you. You come down and reset at the bottom because this is where I want to get in. And have a look. When you had a cross up at the bottom. This is what happened to Ethereum, right? And I move the price action a bit further. And when you had another cross section here, right? This is what happened to Ethereum, right? And the same thing applies from above. When you have a cross down, look what happened. Comes down. When you had another cross down, look what happens, right? When you had another cross down, look what happened there. So stochastic RSI, ASO, DMI is going to give you the clues. So listen, I don't need to panic, right?
Exactly.
Ethereum is on a downtrend. I'm looking for short positions, right? Short opportunities, so to say, right? Go with the flow, go with the trend. It's a downtrend. I'm going short, right? Go in a smaller time frame like daily now because you were looking on the weekly. Pull that trend line of yours here to there. It's okay, cool. I got the trend line now, right? Do you want to measure that angle on the daily? Look at that, 30 degrees. So it's healthy, right?
Mm.
And this is how you're gonna do it. Um, so, Ethereum is approaching the bottom. So I know this that in the next couple days I'm gonna prepare myself to get into an entry for long if he wants to go long, right? And then you need the conditions. I see the indicators, right? I move down to the daily, and then I need to break the trend line, retest the trend line, right, and break the structure. And then I go in, I put my risk management in play, my stop loss, and if it goes and gets me, hey, it's fine because my stop loss it's minimizing my losses. That's why you know I have the number and I say, listen, it's 2%. That's it, right? It's 2%. That's how much I'm gonna lose.
Thales,
Yes, ma'am.
I think it is time now for you to jump off. I'm
Yeah, I
so
know.
pleased that it's weekend because you're not in the emotional space to trade because you are sick. Don't trade when you are sick, people. It is the wrong time. But take a rest, Thales. You are always here for us. We don't want to see you on Discord for 2 days at least. Get some sleep. And we hope that by Monday, trade
I'll,
hunting,
I'll,
you're available.
no, we'll be okay. We'll okay. I'm gonna be back and strong.
Can
If,
you
if
guys,
you're
I,
not,
you
I'll jump
guys
in.
hear me okay?
yeah, we can hear you. Good
Hey,
stuff.
We
awesome.
can hear you.
Okay.
Morning, Chris.
Hey, how you doing, Terry?
Good, thank you. So, Chris, I don't have any. I don't know how to with StreamYard share a chart, so I'm going to leave that up to you. But I'm here to just banter and all. How long is your stream, Thales? Is it an hour, or were you on for
It's
2
an
hours?
hour. It's I'm closing down now. It's Chris'
Okay,
turn, so I'm gonna pass over
so
to
Chris,
Chris.
fantastic.
Welcome to hang with me, Terry. If
For a
you,
couple of minutes,
yeah,
I'll
you're
just say
welcome.
hi and we can chat. Thank you, Thales.
Thanks,
Thank you,
Thales.
Thank you.
guys. Have
Cheers,
a
Okay,
brother.
nice weekend, and I'll see you on Monday, right?
see you on
Is
Monday.
Banter Bubbly still awake? Eh? I don't
Yeah.
know
So it's been
how you
around.
manage it. I don't really know how you manage it.
So, guys,
Good
Chris.
morning to everybody.
Good morning, Chris. So I was telling everybody how different, if you don't have goals to your trading, that, financial freedom ain't going to happen. So I was saying how different people have different goals, buying a car or traveling like Chris. And without those goals, you don't get anywhere. And Chris, who lives in Cape Town, well, all over South Africa, actually, we kind of have dinners and that sort of stuff. But right now, I am so jealous because he's in the UK, and I'd love to be there to see Sai and Cyan, my sunshine, my sister. So Chris is going to see them for me. But Chris has achieved this by sitting down and focusing on his trading and learning his strategy and doing it. And that's the amazing thing, guys. And Chris, it's all yours.
Thanks, Terry. Okay, so I see we still got quite a few people here.
Yeah.
And what I would like to do today is I'm gonna run through a strategy which I follow a variation of, and the purpose for you guys is essentially I want you to have a look at it and build variations of it for yourselves. You know, like it's not about following my strategy or following anybody's strategy. It's about building something that works for you. So what we're going to go through today is how you look to build a strategy that essentially follows 3 systemic rules which are necessary in any trading strategy. First is risk management. Second is building consistency into that trading strategy. And then third, you need to have a systemic approach to taking profits off of the table when you make them, so that you don't just give it back to the market. So we're going to go through a strategy where essentially we're looking to build positions for 3 to 5% moves in price action. So we don't need to take more than that. The change in that mindset for me was a shift from being a break-even trader to actually making money in the markets, when I stopped looking to push for pumps, you know, like instead of pump hunting, instead of trying to like get those 10% moves in price action, which are a lot more irregular, to actually just taking projects that are ranging sort of on a 3% scale, 3 to 5% scale, and then just trading those moves. And from that, able to essentially with leverage get 10 to 30% on profits on capital, depending on how many of the entries you get before the move. So I'm gonna present this, and some of you guys will have we've chatted about this before on my Monday morning sessions. Just give a shout out in the chat. Who's here that generally joins my Monday sessions? So I'm just having a look quickly in the chat here. Cool. Okay. David, what's up? Chaos, you still here? Luke, Banter, Bubbly, how you guys doing? Tom Kitloy, what's up? Auntie, I see some regular faces here. I see some people I know. Awesome to see you all here. Bright and early or late in the day for you, I'm not sure. It's bright and early here in Manchester. So let's okay, cool. So let's jump into this. All right, Yo Ice Boy, what's up? All right. All right. So essentially, let me just jump into this quickly for you guys. Okay. So the objective of the strategy is essentially, look, growing $100 to $100,000 is an amazing goal. It's an amazing target. That's 30 perfect trades. 30 perfect trades gets you from $100 to $100,000, right? You don't need to have such an ostentatious goal. Having 30 perfect trades is also next to impossible, but having a systemic way where you know what percentage of profit you're going for, looking to make sure that that percentage of profit in the chart is a reasonable target, right? And then taking your money off of the table and not caring if price moves or fluctuates more than that, right? I'll show you when we go into the charts also how regularly price does 3% moves and then retraces. So going for those 3% targets increases consistency in profit taking. Okay, so you're looking to maximize price action moves, right? We go maximum leverage of 10x, right? Starting generally 5x or 10x, doesn't really matter. It's more about the size of the trade. If on a $100 account, you're looking to build a $1,000 position, but while managing risk and keeping risk as the primary cornerstone of the trading strategy. So that means that you're looking for trades that give you, if for instance it's a 1% move, you're then going with a $250 position. And if your stop loss is 1%, you're looking for a $250 position. and then building into that position. If you get a 3% move on a $250 position, that still gives you $10, which would still equate to 10% on your capital. If you've got a $1,000 account, and it gives you, you would be having a $2,500 position, and that would give you $100 on your capital, and you're able to manage your risk and actually still and make solid cash. Okay, so so the key components, right? So you're doing rigorous back testing on your TA, right? So you're looking at historic data on the projects that you trade. You look at trading only sort of a handful of projects, something that you get to know very well. You get to, the more you trade a project, generally the more of a feel you have for it, right? You get tuned in how that project moves, what size moves that thing, the project does. Is it trading in a range? Is it trading in the top of the range, the bottom of the range? And you can become a lot more confident in price action. So then we looking to identify market sentiment. So that's when we're going through the green sheet that I show you guys quite often. We're looking at market strength. So, and also you're looking at how risk on or how risk off the market is, and you're looking at how strong the tokens are looking. So you'll let's let me, not sure if I can, oh, hold on, let me just jump into, let's jump into that green sheet now, because I see that there were quite a few people that were asking about it. So let's have a look at that. If David, if you could bring up that, there we go. Cool. All right. So when you're looking at market sentiment, okay, now you can see, instead of just going directly into the charts, what we try and do is we try and a great way to start your day as a trader is to start by looking at the macro indicators for the markets, right? Now, what that includes is your S&P 500, right? So I'm going to run through this for everybody, so that even the guys that, so that everybody is on the same page. Okay, so you got your S&P 500. S&P 500 is top 500 companies in America. It's a great it's a great indicator to use to see are people risk on or people risk off to the markets, right? Now, what that means is that you can essentially then build trends around the S&P 500 and around the Dixie, which is your dollar index, to see, are people moving money risk on, as in are they moving money out of government bonds and out of the dollar into the S&P 500 and the markets, or are people moving money out of the markets into more risk averse assets, like dollar, like bonds and things like that? And that gives you a good indication of the flow of cash. So in what way is money moving? Is money moving in or out of the markets, right? So by taking a look at these as like a start of your day, we can identify whether or not we're looking for a push up in the markets today or push down in the markets today as a indicator, right? So these are ways that we can build sentiments towards the market and hopefully improve our accuracy when it comes to actually taking a trade, instead of just jumping sort of directly into Link or directly into the render chart or Sol or something like that, without first understanding what is Bitcoin doing, what is the S&P 500 doing, what is Dixie doing, So let's have a quick look. Obviously, Saturday S&P is closed, right? But we can see that we had quite a bit of weakness leading into the close of Friday, right? Now we've also broken out of a range that we were trading in since June, right? We've come down, we've retested, giving ourselves now a fourth touch on this trend line coming up. You can see my charts are like full with the teachings and things. I've got all sorts of things drawn at you. All right, so come and see, we broke just before we closed. We actually broke this trend to the downside. So it's going to be quite interesting to see where we open when we open up again on Monday. I don't trade on weekends. That's one of my rules, primarily because volume is less and there's more manipulation. And if we don't have rules, then we can't have structure. So something that I don't trade on weekends, but we'll go through this as an example, all right? So imagine that was your Monday morning. On Monday morning, we have a look. Let's see where we open. If the markets are going to open down, then essentially we are trending. We have broken trend, and we are creating it. We've created a low. We've created a lower high. We're either going to open with a double bottom, or we're going to create a new low. And if we break that trend to the downside, then essentially like Bitcoin sneezes, altcoins sneeze harder, like altcoins dump, right? The S&P 500 historically that sneezes, then it creates a massive downfall or like a massive dump in the crypto space. All right, so that technically shows that towards the close on Friday, we had people moving risk off, taking money out of the S&P 500, right? Now, we've got on the Dixie, right? So then on the Dixie, line out your supports, right? Line out your supports and see what, and then have a look. So come Monday, we want to see, are we trading above or below support, right? Are we looking at a lower high here, right? Are we looking at a double top, right? Are we looking at a new low? Like, are we looking at a double bottom? And use that to give yourself an indication as to whether or not you're looking for a move to the top. Is the Dixie finding support? Is it finding resistance? Is it breaking support? And allow that to give yourself an indication as to whether money is moving into the dollar or out of the dollar. And if it's moving out of the dollar, then it's generally most likely going to be moving into the markets. And if it's moving out of the dollar into the dollar, then it's going to be coming from the markets, right? We've got Bitcoin, right? So now we've got the S&P 500 coming down, right? You've got the Dixie kind of holding above this support zone at the moment, right? But it is also sitting with a new low currently, although you could get a push. This could, you want to see what's happening on Monday. And you might see something like that coming out, right? So we want to look at direction on Monday morning as to where we're looking with that Dixie, right? Now we've got Bitcoin. Bitcoin had a major trend, right? So major trend all the way back from Jan this year. We were holding above it. We were holding above it. We were holding above it. Then we had this dump off that you guys know about to 25K, right? Now, I was hoping for a wick below this level just to kind of grab any cash that's sitting here, because there's quite a lot of there'll be quite a lot of stop losses, and there'll be quite a lot of in this area here, right? So I was kind of hoping for that wick, and I had some orders sitting down here just under at around 24,500. I had some orders sitting under here because I wanted a wick down here to try to grab up any of those longs. People that are long here, they put their stop losses, but that level got defended, right? And the price got pushed up. Now, essentially the market is made up of bears and bulls, right? And the price action that you guys see on the chart is essentially the war between the bears and the bulls. 51% of people go long, price goes up. 51% of people go short, price goes down. And you never really actually are aware 100% as to who's trading at what time, right? So this is the confusion. So this is why we look for probabilities. So you've got now a push back up into this trend, right? We've also failed to break the 30K high at the moment. At the moment, what we're seeing is a rejection of that trend line. So unless we're actually going, so that gives an indication that we are going to have a push back down. Also bear in mind, now the market moves in waves, right? It moves in waves. You take your fib, you draw it onto a wave. In order for there to be a healthy reversal in price action, you need price to pump up, right? And then once price is pumped up, you need it to then retrace 50%, a minimum of 50%. Generally to the 6-1 a bit within. So if I was to pull the, see, so you've got the price coming perfectly into the golden zone, right? If I take it on the next wave, I'll show you again. Okay, into the golden zone, right? So this then completes a healthy wave in price because we've gone up, we've retraced 50% back to grab additional orders that were missed here, okay? And then we've taken the next wave, right? Now, at the moment, if you were to look at what the price action currently looks like, you know, could be something, it looks a bit like that over here, right? So it looks a bit like, you know, what's happening over here, similar to what could be happening over here, or what happened over here. And then you get the pump, and then you get the retracement, okay? You get the pump over here, pump, retracement, okay? So in order for us to continue this wave, we need to be able to actually break above and hold that 30K, right? Now, we are trading above. The only thing that's bullish currently around that is that we're trading above that 200-week moving average, okay? But if, for instance, you were to call that the wave, now I'm going to just, you can see how, let me just pull that up for you guys a little bit closer, right? There we go. Okay, so current price action, you can see that we've rejected, okay? Which gives me a potential sentiment. If, for instance, with a strong Dixie coming into Monday, with a weak S&P 500, okay? So that S&P 500 continues its push to the downside when it opens, right? The Dixie pushes up, right? S&P 5 that would give sentiment towards Dixie coming back for a retrace, right? And I mean, if that was to become the wave, right? You'd then be looking for a healthy retrace back towards the trend line over here, back to the 28K mark. Hold the 28K mark, hold the 200-week moving average, which is kind of ticking through the golden to the golden box, right? So I would be looking to essentially then look to trade, right? Coming into Monday, a move to the upside, right? But in order for us to find that, we need to find some strength in the S&P 500. We need to find some weakness in the Dixie, and then we're looking for Bitcoin to hold that level, right? And either that, or we're going to have over this weekend a final push and a push through that way, right? So let's mark out that area, right? And let's clean that up. So we want to see whether or not price over the course of the weekend is going to reject that area. If it rejects that area, then we look to the 28K level, which falls as the top of the range. It falls in with your 618 retracement. It falls in with your 200-week moving average, right? So so that we start to identify zones of potential high volatility in price action, right? And then if, for instance, we get to that level, but we're still seeing major weakness in the S&P, major strength in the Dixie, then do we go long or do we wait for that break and retest to take the short? And this is where our market sentiment comes into play. All right. Can you guys, Fahad, can you hear me now? Maybe unmute yourself. Just throw in the chat if you can hear, if everyone can hear me, guys. Okay, Simon, you can hear me. Cool. If any of the mods or mentors are here in the chat, you guys are welcome to come up here and join me on stage if you feel like it. All right, so then this is where we're getting market sentiment, right? Okay, so this was Ethereum short that I mapped out yesterday. Okay, so we had touch into the third touch into this trend, right? Also, I want to show you on that. Okay, third touch into that, rejection of the 286. Okay, creating a lower, showing weakness with the retest, right, onto that trend line. Stop loss towards entry, trade 3%. Okay, so the strategy that we're looking at here is not about, I believe that Ethereum is going to go all the way down. No, Ethereum has rejected, therefore it should come and retest that previous support zone before taking another push up. So you're then looking for a 2 to 3% move, not more, but with leverage that can be 10, 20, 30% on the trade. So market sentiment, we're looking at weakness on Bitcoin, we're looking at weakness on Ethereum, we're looking at weakness on the S&P 500, we're looking at strength in the Dixie, holding above support. And I want you guys to understand, to see that as you look at these, as you look to these indicators, understand how they interact with the rest of the market. You know, money moves from the Dixie into the S&P makes a strong market. Money moves out of the S&P into the Dixie makes a weak market, right? If S&P is strong, that means more than likely, historically, that means Bitcoin will be strong, right? If Bitcoin is strong, then we look to Ethereum, right? Because essentially Bitcoin becomes the gateway into cryptocurrencies. Ethereum is the gateway in inverted commas, you know. This camera is terrible. I need to get a new one. It's money moves in from Bitcoin into Ethereum. That essentially is like the gateway into your altcoin market, right? So if you start seeing, okay, Ethereum is coming down, Bitcoin is also showing a rejection. It's showing a lower high. I'm going to delete this because it's messy. We've rejected that area at 29,900, right? We've rejected that level, and we start to look at, okay, cool. We found that as a support, and this is something that I'm going to look at over the weekend. I don't trade weekends, like I said. So we're going to see, okay, cool. How does this play over the weekend? Are we going to find support in this area? Are we going to start to create a bullish wedge for a push to the upside? Or are we going to start breaking? Are we going to find ourselves breaking this trend line, right? If we start breaking the trend line, then probability of us coming back to retest the previous support is higher than us breaking the trend line, finding no support, and taking a push to the upside, right? So Ethereum Bitcoin is essentially the next components of the green sheet, where we're looking for strength between Ethereum to Bitcoin. Now, if Ethereum is strong to Bitcoin, that means that the altcoins, essentially money is moving from Bitcoin into Ethereum. And if money is moving from Bitcoin into Ethereum, probability is it's moving into other altcoins as well. So a strong BTC to Ethereum chart means probability of more of an altcoin push in strength and dominance than and then a Bitcoin push in strength and dominance, right? Which then gives you correlation, so you can then correlate that to your Bitcoin dominance. Now, if we're at the moment, Bitcoin dominance, where I was looking for a rejection on the 200-day over here, okay, and back into the range, we rejected, and then we've punched through. Now, at the moment, the next, there's not really much in the way other than this area over here, right, as a reversal point, right? So if price breaks through that, your next trend support is up there. So you want to see these levels. Are they rejecting? Are they holding a support? If you break a resistance, the resistance becomes support. If you break a support, the support becomes resistance. So you look to the Bitcoin dominance to see if, for instance, you're wanting to see altcoins kind of go for a run, then you need to see Bitcoin dominance kind of turning over and becoming weaker, showing money moving from Bitcoin into alts. You can correlate that to your Bitcoin Ethereum charts, right? Now, at the moment, we are breaking. This is your 200, your moving average, right? 200-day moving average. I'll just confirm it here. 200-week moving average. Okay, cool. So we got your 200-week moving average here, which we have broken, showing further weakness from alts into Bitcoin, which means money moving from alts into Bitcoin, people are going risk off with their alts, moving it into a more risk-averse asset being Bitcoin, so that because they're expecting price action to move down, people are moving money out of Bitcoin into, if people then move money from Bitcoin into USDT and USDC and government bonds and back into their bank, then you start to see weakness in Bitcoin as well. You get weakness in dominance, you get weakness in Bitcoin, altcoins dump, right? Because essentially that's to do with the market cap from an altcoin to Bitcoin. If $100 million move out of an altcoin, it makes a massive difference to the market cap of that token compared to $100 million moving out of Bitcoin or out of the S&P 500. It's a much smaller percentage of the total market cap. So you get a much bigger action and price action on an alt compared to Ethereum, compared to Bitcoin, compared to S&P 500, right? So because we're looking now, I look to this chart because I don't want to look to the projects that I'm trading without first understanding, am I looking to these charts for weakness or am I looking to these charts for strength, right? So essentially, by looking at the green sheet here, we can get an idea and or an expectation to the market to say, okay, well, markets should be having a retracement here, or they should be actually going for another move up, and what you want to see for another move up, right, is for Bitcoin, you want to see another move up. You want to see Bitcoin kind of trending up and creating a bullish wedge over the next couple of days, for a potential push to the upside. You could look at this, and I'm going to just, are we creating a cup and handle, right? Or are we having a rejection for a push down to the 618? If we push down to the 618, how's the markets looking? Are we looking to break that and retest and take a trend to the downside? Or are we looking for a break, a push to the upside with a little cup and handle formation, right? So how do we look to trade it will be dependent on what the markets look like on Monday. All right, so come back to the strategy. So this is where we're going to look for a bit of strength or weakness in the markets, and this is how you're identifying market sentiment before you go to your charts and look for trading of those charts. just when I get my other screen up, and then we'll continue with the strat. Cool. All right. So this is where we're identifying market sentiment, right? So you're using the macro market charts to give you an indication as to whether or not you want to long or short. The reason why we do this is because originally it would have been, okay, cool, we're moving into a resistance, take a short. Okay, cool, we're moving into a support, take a long. But now we're going, okay, cool, we're moving into a support and we are looking strong on the macro indicators, right? We are moving into support on Bitcoin, support on Ethereum. The Bitcoin dominance is turning. Dixie has broken support and retesting it as resistance, and we are finding a support zone on this project. So let's look for a long position. So it's about building a bigger picture as to taking a holistic view on the market instead of taking a very lasered view on the market where you've got your, instead of having blinkers on and looking at a chart, let's take the blinkers off and let's try and look at it from a larger scale, and then and understanding how those are going to affect the altcoin market, and then looking at alts for the next move up or down, right? So now markets look weak, markets look strong, right? Look to long or short in line with that. Cool. So position sizing is also the next part. So essentially in the strat, you don't want to risk more than 2.5% of capital, right? Max 2 to 3%, right? Which means that you need to be able to build positions. Okay. So I'm going to show you guys essentially how to ladder into positions, and then look to target your daily goal, right? So with the strategy, your daily goal is essentially to get a 3 max to 5% move in price action, right? And you look to target that as, I've got a strategy in place and I know what I'm looking for, and I don't care if the price moves more than that, right? Because probably the amount of times that you get into a trade, and I mean, throw this in the chat, guys, if I'm speaking to you, the amount of times that you've gotten into a trade and you've set your you've become greedy with your take profit zone, or you've looked to trade that 5-10% move, and instead watched it retrace, give yourself a little Bart Simpson pattern, and then boom, straight back to entry, and think about this. How many times has that happened to you? And then how much money are you leaving on the table every single time that happens? You get the perfect entry, you see price pump up, right? Gives you a 2-3% move, and then reverses back to entry, or reverses back and stops you out, and you're leaving a lot on the table, right? So it's identifying market sentiment in the market, so that you can have a feeling towards whether or not you should be looking for a push to the upside or a push to the downside, right? Or you look at the markets and you're like, everything is kind of just trading sideways. Maybe today's a day that I should take a break and go and spend time with family, or go out and enjoy the day, right? That's me, Fahad. Yeah, it's a lot of us. It's a lot of us. We've all been there where we watch those Bart Simpsons play out and leave money on the table, man. Now, by having a goal in place and understanding how that goal is going to affect your capital over time, it'll help you guys to mitigate your emotional state, move away from a state of mind where you're looking for massive pumps and dumps, which for me is like that's the gambling. That's for the gambling account. That's for where you've got $50 on a little Bybit account, and you wake up in the morning and you pick up your phone and you're like, okay, cool. What's happening? Oh, I see a trade. Boom, throw in money. Like, let me see if I can get the pump. XRP cases over. Let me throw $50 in there. See what's going to happen. That's gambling accounts, right? Now, what we're looking to do is have a systematic approach to trading in a way that we don't care about the 5-10% moves, right? We know that if we can consistently grow our accounts day on day, right, we're going to be able to, over time, build something that's massive, right? And this is massive, okay? We slowly but surely building up, managing risk, and getting to a point where we can systematically then start taking profit off the table and actually get some financial freedom. So on a daily goal here is, and I've posted this document on Discord for you guys as well, all right? So target price, you're looking for 2 to 5% moves in price action. Now, how you identify those shifts in price action is you're looking at singular waves in price action, so that you can comfortably see that if prices to move down, the earliest support or resistance zone for price to move into gives you that 2 to 5% move in price. All right. Now, you're looking to trade 2 to 3 trades per day, okay? And you're aligning that with historic patterns and opportunities. Like I said, look at historic data on that project. When that price moves in a day, does it generally, how much is it moving? Is it moving 2%, 5%? Is it like how long are those candles on a daily basis? Just hold on. So next is your technical analysis, right? So you're utilizing your insights from historic data to define your technical analysis, right? So the more sentiment that you guys can build around, or the more sort of, if you can get a solid sort of you can see strength in the market, you can see that you're finding support, you can get your TA in place and your strategy in place, and then you get that push for 3 to 5% of the upside. Now, if you've taken leverage on that of 10x, now let's say you've got $100 in your account, right? Your initial trade is only going to be $250 if you've got a 1% stop loss, right? So let's just come down here quickly to an example, right? So here you've got this. We had price, right? We're looking for a reversal in price action to the downside. Okay, so you come up, we retested. You could see that we held below below the 618 resistance zone, right? We came down. We came for a push back up, right? So at this level over here, this is not where you're entering a trade. You're not entering the trade yet. You're not entering the trade here, right? Because you're not creating new lows. You're not creating new highs or anything like that, right? You're looking to get a push back up, and then that area over there becomes your disqualification area when you're looking to trade. So when you're entering a trade, you need a clear, defined area within which, if price action breaks this level, I'm wrong, and we're not going down. We're not rejecting. We're creating a new high, right? So you can see that how price showed weakness, right, and then broke down, right? Came back, retested that 618 again with a very weak rejection, right? So that initial entry is going to be essentially a $250 position on $100. If it's $1,000, if you're trading $1,000 accounts, then you're looking to build a $10,000 position, right? But the example here is $100. Now that initial entry, if you just the thing is, you can also only trade a quarter of your account on the strategy. And with a quarter of your account, you're getting a 10% on capital each day, while only risking 2.5%, which means that you would need to win 1 in 4 trades, right? If you're able to get 50% of your capital into the trade, you're looking for confirmations, right? So you're looking for confirmations on a lower time frame. So you would take that initial entry of where you get the rejection of the 618, right? You're then looking for a break on the lower time frames, a break to the downside, creating a lower low, lower high, bringing that lower high in. You can then look to trade. Now your initial entry off of the 618 as a high to say, okay, cool. Well, now if we're breaking that, right? So now you need to see weakness to the downside, and you can then bring in your stop loss, right? Bringing your stop loss down so that you're able to double up on your entry and treat a push above the 618 as your rejection. But you're looking for then confirmations on the lower time frame. So you're trading a higher time frame chart and then looking to ladder into that position on lower time frame confirmations that you've judged the rejection on a higher time frame into that resistance cleanly, and then looking to add to that position. And obviously, the more you're adding to the position, the more risk you have of a wick into your stop loss. So the probability of you getting stopped out of the trade becomes higher, right? But if you get it right, you're also getting a higher probability or a higher percentage on capital, right? So it's a game between the two, and it depends on how accurate you can become with judging price action and price moves and how traders are currently moving the price at that point in time. I mean, getting a quarter of your capital into the trade and making 10% and on that 3% move to the downside is still massive for your capital over time. You know, if you can, I think Freedom was talking about this in his and other guys, you know, consistent gains over time is a lot more important than pump hunting, right? Now, bear in mind, on this move, you know, you get your 3% move, the price can continue, and you no longer need to worry about that. It's no longer pump hunting. I'm not taking trades for endorphin hits here. I'm taking trades for consistent gains in capital and capital retention, and so that I can build a business out of this. You know, people don't think about this as think about this as a great example, right? There is always money available, right, to invest into casinos. And if someone wants to build a casino, there will always be money available to invest into them building that casino. Nobody invests into gamblers, right? Nobody, right? If you go out there and you're like, I've got a business plan and I'm going to go to the casino every Friday and throw money on red, right? Nobody's like, you're not going to find investment for that because there's no edge to it, right? But as you're building your business plan, right, you need to be building the casino, not the gambler. So let's not be the gambler, let's be the casino here, okay? How do we do that? Okay, we give ourselves an edge in the market. We understand what is market sentiment for the day. Are we looking for weakness or are we looking for strength? You know, are we looking for then once we understand, are we looking for weakness? Are we looking for strength? Let's look at our risk management. What is my max risk that I'm willing to take on a trade? Okay, cool, 2% of capital. So if I'm willing to take a trade of 2% risk to capital, what is the size of the trade that I'm capable of taking once I've identified where is the disqualification area in the chart? So say I was wrong. If price breaks this level, I was wrong. Okay, cool. Now, once I have those two zones mapped out, my entry, my stop loss, okay, then I can look to, all right, I need a 2 to 5% move in price action here. If I was to get a 2 to 3% or 3 to 4, percent move in price action here, where does that take me, right? Am I hitting a range? Am I going through any major resistances or supports in order to get to that move in price? Yes or no? How far away is the next major support or resistance from my take profit, right? And it's something like this where you've got a potential sort of full-on reversal happening, right? Now you've got, okay, well, look, major resistance is down at this level, okay? So probability is at least that we're going to come and retest these lows here, but higher probability is that actually, because we've shown weakness and market sentiment is showing weakness, the chart is showing weakness, probability is we're going to come down to that level, right? So I can comfortably build the position in and still get a 3% move, making up to 30% on capital, or at least 30% on the trade, and taking my profits here. But there's no need to push for that all the way down to the bottom, because that's not that because you've already made your target for the day, right? So let's move away from trying to get the pump hunt and dolphin hit from our trading strategy, and let's move to something that's more consistent and ongoing, right? Now, so we're looking for that risk to reward of 1 to 5 on a trade. The reason why we're doing that is because we want to give ourselves some room to build and add into that position, right? So we're looking to take an initial entry. We need price to move, retest. We need to be able to add to that entry, try and build a position, and then get that 3% move, right? So that gives us some flexibility, okay? You want to cut your losses quickly, right? And build and essentially let your profits run based on historic performance, right? And take your profits when you hit your TP. Don't reassess and update your take profit zones. Don't they're like, actually, I'm going to increase my TP here because I think we're actually going further. Why? You're making your profit. You're hitting your target for the day, right? I mean, I want to just show you quickly a very unlikely but possible scenario where if you were to trade, I don't know why it's not in my document now. I think, hold on 1 second. I'm just going to change the document. Looks like I've actually got the old one open here. Sorry, guys, 1 second. David, could you just bring that up for me? Thanks, man. All right, guys. So 30 perfect days, trading $100, $30 per day, or 30% per day. All right. So that means you're getting a 3% move in price action, and you're getting 30 perfect days. 30 perfect days is not really a feasible plan, but I just want to show you what you can do. 30 perfect phases, right? Now, in 30 phases, you would take $100 to $100,000, right? If you were to start trading it as a win-lose strategy where you're winning 1 in 4 trades, I just want you to see the power of consistently taking profits off of the table. So phases being you winning now 1 in 3. So if your win rate is 1 in 3 trades on average, you can take $100 up to $100,000 in 37 phases, right? If you're trading $100 to 100, you can trade it up to $100,000 in 40 trades in 42 phases. If you're getting a 1 in 4 hit rate, and that's by managing your risk, making sure that you're never risking more than 2.5%. Now, the best thing to do is to not push for that 100,000, right? Get your account up to a point where you've now taken it from $1,000 to $10,000, and you're taking it from $100 to $2,000, and you then start a systematic approach of every single time you bring an extra 50% of capital into your account, right? You're then also taking money off of the table as well. So you're consistently growing and reducing, growing and reducing, growing and reducing, and taking money out of your trading account, taking it out of the exchange and moving it into something where you can actually use that cash for something else, right? As soon as you're able to then start drawing money out of your trading account and actually start spending it, the money in your trading account also becomes a lot more valuable. You actually start to see it as real money, right? Instead of just monopoly money, which I think is something that I don't know. I think some of you guys could attest to that. When you've got money, you end up taking an account from $100 to $1,000, right, or $1,000 to $5,000, and then the money is there, and you know it becomes monopoly money. It's like now you're getting these massive endorphin hits from the market because you're growing that account, and then you forget that actually that's real cash that can solve real life problems. So let's jump back. So just throw a comment in the chat if you guys resonate with that. Cool. So we've got the risk to reward ratio. We've got your stop loss and take profits, right? So you're setting your stop loss. So limit losses to 1-2% of capital. That's if this is now determined by your hit rate historically. Okay. Look at your technical analysis from previous trades. Are you getting 1 in 5 hit rate? Are you a 1 in 10 hit rate kind of trader? Are you a 1 in 3 hit rate kind of trader? And that will be determined by the amount of patience that you're willing to give to the charts. If you're aping into trades all of the time, you're going to find that you're hitting your take. You're going to hit your stop loss a lot more frequently. If you're waiting for price to reverse, come into your zone. Your zone is a higher time frame resistance or support area. You get lining it up with your fibs, not aping in when there's a small little bump in price. You're going to find that your hit rate's a lot higher. You're going to take less trades, but your hit rate's going to be higher, and rather take less trades with a higher hit rate, right? So you're then looking to leverage management, right? Okay. With the strategy, you're trying to create a 10x position on your whole account, right? That doesn't mean that you have to have your whole account in there. The trade can be on a quarter of your capital, and especially when you start getting to larger levels, when you're no longer trading $100 and you're actually trading, you're trading a $1,000 account or a $5,000 account or a $10,000 account. Getting 100% of your capital into the trade is not really necessary, right? You don't have to get that. You can be literally trading with a quarter of your account on the majority of your trades and getting that comfortable 10% on capital on each move, but you become good at gauging smaller moves in the market more consistently than trying to look for pump hunts, right? Morning, Luba. Morning, Tom. Morning, guys in the chat. I see you there. I see you, man. Throw some questions out there if you guys are liking this strategy, if it's something that you feel you can implement or take components of and include into the strategies that you guys have, right? So on risk management, right? Now you're laddering into positions, okay? So that you're managing your risk. Don't ape, right? When you see that price and the price kind of goes from and starts moving away from your entry, and you're like, we're going down now. No, wait for the retest. See if are we going to get that sort of, we're getting the high, are we getting the lower high? Are we coming up and forming a lower low? Then we're getting that lower high. Okay, cool. On the lower high, all right, let me add to the position. No, not on a lower low. You're going to wait for that retracement to the lower high, adding to that position, right? Now you're learning from losses, right? Analyze losing trades based on historic data. Okay, so learn where you're going wrong, and this is where your trading journal comes in handy. Okay, this is where your trading journal becomes important. I got stopped out on this trade because I aped into it. I got stopped out because price moved down to a higher time frame support before it rebounded. I got stopped out for this. I won this trade because of that. Learn from your. This is not about trying to gauge perfectly every single entry and exit. This component is more around understanding your own psyche, understanding your own inhibitions and ambitions towards the market, and see how that is affecting your trading success or failure rate, right? So now you've got your exit plan. Okay, cut your losses quickly, take your profits when you hit target, right? This is more around continuous education. Okay, so essentially the strategy integrates a data-driven approach. Okay, you're incorporating back-tested technical analysis. You're looking at market sentiment, and you're being disciplined with your take profits, disciplined with your risk management, disciplined with your take profits. Become more consistent with taking money off of this table, and have a systematic approach to how you're going to take it off. Have a rule. if I have $100 and I grow it to $200, I'm going to take 20% off the table. If I grow it from 200 to 400, I'm going to take 20% of the table. If 25% of the table. So you're going from 100 to 200 to 150, 150 to 300 to 200, 200 to 400 to, and do you understand how you systematically need to have a rule in place as to how much you're going to take. Every time I double my account, I want to take 25% of my account out, right? And what does that do? That means that if, for instance, you end up having a losing streak, you're capable of rebuilding your account, right? When you start getting to a certain point, the systematic approach of taking money off of the table actually becomes a way that you can build a salary for yourself on a month-to-month basis, right? By taking 10% or 20% out at specific intervals that are predefined, and you know that when I hit this target, I must take that percentage off the table, right? You're building a business plan here, not a gambling habit, right? So, Mr. Tiger King, I'm gonna post this again now for you guys in the Discord, so you guys can get it there. Okay, so essentially this is now a couple examples on trade setups, right? We've gone through that one. That was for a potential bullish market. Obviously, this can be this can be for a weak market setup or inverted for a strong market setup. Okay, so another one would be on bullish market setup. So you'd be looking for you see you've got your third retest of the trend. And this was the example I wanted to show you guys where quite often, you get, this was chain link like a week or two back, right? Now you had that retest of trend. That trend was coming into a major support. Cool. Took the entry, came back, retested, created a higher low. You can then you treated this initial entry as your lower high, your low, right? Can add to the position by reducing the stop loss. So you're now reducing stop loss, adding to the position, still keeping your risk at 2.5%, right? And you're getting extra into that capital, and then you see how that 3% move in price action is to that previous high, right? So you're trading for the double top. You're not wanting a break. I feel like we're making a new high now. No, okay, cool. If I just trade this position to the previous high, I can get, that's a 3-5% move. Let me take that trade, not, we're creating a higher low. Now we're definitely going to go to, we've got a 10% pump coming. No, like if, for instance, if you were trading that, right, what would have happened? Okay, cool. You would have traded it up. You would have seen that we got that high, right? You would have felt, okay, cool. We've got a break in market. We've got a break in structure here. You can see that we broke this. We broke the structure here. We've created a high now. Okay, cool. Then what? Oh, we're creating a higher low. Oh, let me add to the position. Oh, we've got a break. We've got a break of trend. Let me take this. Let me take this up. And then what happens? We come all the way back to your entry. You leave all that money on the table. But by having sort of a approach to, I'm looking for consistency. I'm looking for risk management. I'm looking for ways to kind of bring this together into an approach where I can consistently take profits off the table, not pump out and get one pump out of 10 trades. Let me consistently get 3% moves, and let me have a win rate of 1 in 5 or 1 in 4 of my trades that are successful, instead of let me pump hunt and I'm getting 1 in 10, 1 in 12 trades that I'm actually getting right. And I'm hitting stop loss on every other one, or hitting entry on every other one, right? So by reducing that sort of TP and keeping your risk management in order, you can trade this quite effectively, right? Now, obviously, 30 perfect trades is not what I'm saying is possible here, but a great way for you to see what is possible with taking consistency, with prioritizing consistency over pump hunting. From the guys in the chat. Now, let's be honest here. What do you guys, what do you think is better, right? Do you guys look for the major moves? Do you trade, do you want those 10, 15, 20% moves in price action? Or and getting sort of that one trade per week where you get that 20% move? Or do you guys prefer something like this, which is more sort of, systematically, like taking smaller percentages, but more consistently over time, managing the risk? Give me some thoughts in the chat. Tell me what you guys think. What's your sort of winning strat when it comes to trading so far? All right, so let's. I think we've got a few more minutes here. Throw some questions in the chat, guys. Throw some questions in the chat. Let me see what I can answer for you guys about this. And before I hand over to the next legend that's going to be coming on after me, we've actually got we're very blessed to have one of the OGs coming on next, Jason, and he's going to be talking around a macro market overview, which I think is going to be epic. So if you haven't heard that from him before, it's a definite must, and he gives a really good sort of calm view to markets and market sentiment. Cool. So Vivian, consistently taking small wins, perfect, right? Consistency over big pumps, right? I think if you also think about it this way, if you guys are going to give your money, if you wanted to invest into like a hedge fund, or you wanted to invest into like a sort of something long term, you're not going to look, okay, cool, over the last 5 years they made negative 4% and then 20% and then negative 10% and then 10% up and then negative 4% and then then they made 30%, right? Are you going to invest into that portfolio, right? Or are you going to look at the guy and go, this guy consistently makes 10% per annum? Every year he makes 10%. It's the same amount every year he makes. This is the gain that he's giving back to people who are invested in this fund. What's going to look more interesting to you? What's actually going to capture your eye? Think about that when you guys are getting into the charts as well. So, Dimandi, it's a pleasure. I'm glad that some of you guys have enjoyed this. There's my Twitter handle. I've also posted this. I've posted this document to Twitter as well. You guys can find it there. Yeah, Jason is the macro king. Hey, Jason, the macro.
Hey, how are you, Chris?
I'm good, and yourself, sir? Welcome to this bright and early morning.
Good morning, good evening, everybody.
Yeah, good afternoon, good morning.
Great to be with you this morning in South African time.
Definitely.
Brilliant.
Thank you for joining us. So I've for those of you who know OG, I'm sure everyone knows OG Jason, the macro king, as he's become known in the inner circles.
Yeah, so
happy to hand over to you.
Thanks so much, Chris. Yeah, so just a bit of introduction from my side. I've been in crypto now since 2016. In 2016, I was also in a corporate business. And those of you that have been in corporate or still in corporate, you know what sort of environment you're in. And at that stage, I was looking for a solution to get out of corporate. And I got an email one day talking about Bitcoin mining. And at that stage, I didn't have a clue what Bitcoin was. But I went to the seminar, and that's where my journey started. I started trading in 2017, and I didn't have any direction. I didn't know who to talk to at that stage. I was really just following people on Twitter. I was actually taking trades based on what people were saying on Twitter. And I had success. Obviously in 2017, we had a massive bull market. I came out of 2017 well up. And in 2018, I left my corporate job. And I managed to build a massive portfolio, even in the bull market, funny enough, in 2018, going into 2019. And when I say a massive portfolio, I'm talking about the size of my coins. I increased my Bitcoin massively over the period between sort of 2017 to 2019. And in 2019, I was introduced to a unfortunate crypto scam, and they were talking about a new coin that they were going to launch, and this coin would be bigger than Bitcoin, and I fell for it, and I took all my Bitcoin and I put it into this coin. Needless to say, within a year, that whole Ponzi scheme collapsed and I lost everything. And really over the last sort of four years, I've been trying to build up my portfolio again. And over this last 4 years, I've really learned how to trade. I'm not an expert yet, but I've learned the ins and outs, and I'm in a much better place right now as far as trading is concerned as opposed to sort of 5 years ago. Last year, well, let me go back to 2020. Craig, the other OG, and myself decided to start up a sort of a morning call for the community. At that stage, there was only 5 of us that were on a Zoom call sort of every single morning. That was in March 2020. In June 2020, Sheldon joined us, and Sheldon started to present. And at that stage, we were still trying to teach Sheldon, but Sheldon quickly started showing us, where to start buying and where to start selling. And look where Sheldon is today. And I'm happy to say that I'm now part of the Sniper team. I joined Sniper last year, June. And Craig and I, yes, we are part of that Sniper team. And we are really blessed to be part of it. So let's get going. So what I want to really talk about today is the macro charts. And it's important that as a trader, you actually go into higher time frames once or twice a week and have a look at what the macro market is doing. And just to get an idea exactly where we are positioned and what could the outcome be of any sort of movement in the market on a higher time frame. Remember that when it comes to trading, it's not about predictions, it's about probabilities. So you always need to look at the probabilities of where the market could go, as opposed to looking at predictions where the market could go. So let's start off with, I'm going to run through a couple of charts of what I look at on a weekly basis. And there's a combination of crypto and stock charts that I do look at. So we will start looking at some of the stock charts to begin with. So let me get going. If we can present here, yeah. Okay, awesome. So the first chart I want to talk about is the 10-year yield. Now, why do I talk about the 10-year yield and the DXY? Well, the 10-year yield and the DXY really are, what's the word? It actually drives the stock markets and to a degree, the crypto market. And if we have a look at the 10-year yield, and I'm going to look at specifically over the time period from June 2020 up to current. And you can see we've been in an uptrend. And over this period, especially starting from last year, beginning of last year, we saw a massive increase in the interest rates, especially in the United States. And this actually really pushed this 10-year yield up from an area of roughly sort of 1.75% going all up to current 5%. So it's been a massive push up in the 10-year yield based on the interest rate increase that we've seen. Now, if we go on to a monthly, which we are now, you can see we have reached an area of massive resistance. And it was resistance previously in 2007, June. And before that, it was resistance in June 2002. And it was a support area in January 2001. So right now, if I go onto the monthly, we are at a massive area of resistance. If I go down to the daily, and the red candle that we see at the top here was yesterday's candle. Remember, the 10-year yield only runs from a Monday to a Friday. So there's a probability that there could be a rejection in this area for the 10-year yield. And we could have a possibility of the 10-year yield retracing, and we look at the daily right now, over the next couple of days coming down, which will probably be quite bullish for the stock market and for the crypto market. Once, if we do come down to this area of support here, where we've got both an area of support at sort of 4.25 going up to 4.4, and we got this daily support line, we would need to see what would the 10-year yield do once we get down here. But what I'm really looking for is a retrace here on the daily. Okay, the next chart that I look at is the DXY. Now, the DXY is the strength of the US dollar against a basket of other fiat currencies. And you can see also, I'm now on the weekly chart, that if we go back to May 2021, from that period, we came from an area around about 90, and we went right up to October last year to an area 114. And this was also once again driven by the increase of the interest rates in the United States, where money is getting sucked out of the economy, plus there has been a drawdown over of the stock market and the crypto market over this period into the US dollar, into the safety of the US dollar, causing that strength to increase like that. But we saw a change last year, October, where we had a correction, and we came from that area of 115, came all the way down to an area of 99.5 in July this year. Then from July, we pushed up quite a bit after finding major support there, and we've come now to an area where there's a possibility of a push down, and we've already seen that from the beginning of October, where we've come from an area 107, coming all the way down to the current support of 106. So that has been bullish for the stock market, this small period over October, and we've seen a push up in the stock market, but unfortunately over the last couple of days it has come down. What I am looking for is this important daily support line that we've got here, and this support line comes from the end of July. If we do start breaking to the downside below this daily support line and lose this 106 support, that would obviously be very bullish for the markets as cash leaves the US dollar and goes into the markets. We do have the 200 moving average on the daily down here at 103.50. And I would expect if we do come down into this area, that this area would be a massive support area. So we'll keep an eye on this over the next couple of days to see what the Dixie does. If the Dixie finds support here and starts pushing up higher again, then we would obviously go up and retest higher areas of resistance, with the next one after 107 being 109.50. And then obviously the one that we had last year where we tested 115 in October last year. Now, if we go and have a look at, I look at specifically the S&P 500. And the reason why I look at the S&P 500 is that last year, when the interest rates were going up and the crypto market was following the stock market very, very closely. And if we go and have a look on the weekly year, and I'm going down to sort of where we started moving up. So we really started moving up after the housing collapse in 2008. So 2009, the Fed started printing, and that really pushed the stock market up all the way up to January last year. And then what happened January last year, interest rates started increasing, started taking liquidity out of the markets, and that caused the stock market to start dropping. And we came down and we found support in the stock market at an area of around 3630. That was in June last year. S&P went up again. It tagged that 200 moving average on the daily, came back down again, formed a double bottom, and from that 3630 in October last year, we've moved up to an area about 46. So remember what I showed you with the DXY starting to actually retrace from October last year. So that cash flowed out of the DXY, the US dollar, and started flowing into the stock markets. Now, if we take a fib, and I'm sure most of you know what a fib is, and just have a look at where we've gone up to, we can see that we've gone up to an area at 786, retracement to the upside. And we've got rejected here in this area of resistance, and you can see that we are starting to move down. If we go to the daily now, we have come down from the end of July down to an area of support here at 4350. Found support, moved back up to an area of 4528, and that was on the 1st of September. And from there, the S&P has dropped, but it has also broken the daily support line that is coming from March this year. So that has been broken, and we have come down to the beginning of October at an area around 4230. Found support there, and also on the 200 moving average daily, moved up from there. And we have closed a liquidity gap that formed here between the 20th of September and the 21st of September, and got rejected there. And you can see Wednesday, Thursday, Friday, massive drop there in the stock market on the S&P, coming down by a total of almost 3%. We are once again in the area of support, and we've got this daily 200 moving average here that we're just slightly below, but we can still hold support here. So I'm looking for a possible pushback up again, and I'm using the word possible, pushback up again based on this major support here we got here, and with the next resistance at 4.3. If this area is lost, 4225, and we come down to the bottom of the range support 4180, we still support there, but if that gets broken, then the next support below that is at 4067. Now, why do I look at the stock market? Remember I said to you that when the interest rates started going up last year, the crypto market was following the US stock market very, very closely. It was in correlation. Right now, there is no correlation. We have seen the crypto market move up over the last couple of days, yet the stock market has come down. But if we do see further downside in the stock markets, there is a probability that there will once again be a correlation, and the high risk asset, the crypto markets, could follow the stock markets to the downside if we start moving down here. So next week, I'm looking here on the S&P to move back up again. Whereas if we lose here, we could be going down to test the next support below that. Okay, let's move over to the crypto markets. The first chart I'm going to look at is let's go to the high time frames Bitcoin chart. And what I'm looking at here is the Bitfinex chart, and I'm going to go on to the weekly. But before I get there, I'm going to move over to the Bitcoin cheat sheet. So we've lost that there. Let me just refine it there. Wow. Okay, it looks like I've lost it there. See if it comes back up again. Let me just go ahead now to have a look at the Bitcoin chart on the weekly, put in the emotions. Now, if you go and Google the Wall Street cheat sheet, you would see that it brings up all these emotions. And just remember that when we look at charts, it's all about emotions. When the chart is moving up, that represents greed. When the chart is moving down, that represents fear. Now, these emotions play out on big time frames, and they play out on small time frames. And what I'm looking now is really at this cycle, and I've also marked out here the BTC halving dates. And we had one, the last one in May 2020, the 11th of May, and the next one is in 22nd of April next year. And what I'm really looking for is I'm looking to try and gather some information based on history. Just remember, history doesn't repeat itself, but it does rhyme. So I'm looking at the period before the halving of 2020, just to understand how did the market act in that time. I'm going to switch off the 200 moving average on the daily here. And we're in a depression phase. That was in November 2018 to April 2019. We were in a depression phase. We moved up into disbelief. That was in August 2019. And then from that disbelief, August 2019, all the way to the COVID drop in March 2020. We found a bottom, and then the market started pushing up when the Fed started printing once again. So they started printing, and we pushed up through the halving, and the market just carried up all the way to November 2021. So we went through all these emotions: hope, optimism, belief, thrill, euphoria. That was in May 2021. We then came down again to that 30,000 level in July 2021, moved back up. They tried to push the market higher than the previous high, got rejected, and from there, November 2021, we came all the way back down. So we went through those emotions: complacency, anxiety, denial, panic, capitulation, anger, depression once again. So I believe that we could be now in this period of disbelief once again, where in August we were in the same area where the market dropped from there going into the COVID drop. Now, the only way that we could possibly not be in this disbelief area is if Bitcoin starts breaking an important resistance area around about this 31,800 area. So if we can break through here, then I would imagine that if, and we possibly going into the next area of the emotions, hope, optimism, and up from there. But if we are unable to reclaim this 31,800 and we do get rejected here once again over the next couple of days, couple of weeks, there's a possibility that the market comes down once again before the halving of in April next year, then possibly a push up from there. So where could the market come down to? That is quite a difficult question to answer. But if I just go back to the period of 2019, so December 2018, Bitcoin came down to 3245, and in March 2020, it came down to 3961. So we created a higher low after that drop, after disbelief. So there's a possibility that if we do drop from here, that we don't go down to this period or this area in the end of last year at 15,600. There's a possibility we create a higher low if the market decides to start to drop from here. And as I say, the stock market and the crypto market is not correlated at the moment. But if we start seeing a massive drop in the stock market, it could bring down the crypto market. Just remember that the crypto market is much more riskier than the stock market, so it could drag it down. So that is really what I'm looking at on a weekly time frame for Bitcoin, just to see really where we are. So it's make or break now. If we do move up into this area of 31,800, make or break. Rejection, possible come down to test lower levels. A push through, I would imagine that could be a open and close candle, I would say, above the 31,800, and a push up from there will be very positive for the markets. Okay, let's just go and have a look at the total market right now. And I'm going to go down onto the daily time frame with the total market. Wow. So with the total market, I'm going to put on the 200 moving average. And I'm looking here at the daily time frame. So the total market has come off an area at around 990 billion. This was in the middle of September. We moved up. We got rejected at the daily 200 moving average on the 1st of October. Plus, we had this previous daily resistance line that was acting as resistance in this area. Plus, we were testing 1.1 trillion at that stage. So it was a massive area of resistance where we got rejected. The market then dropped going into the middle of October, came all the way down and retested 1.02 trillion, and then moved off there, and where we currently find ourselves, where we've broken through the previous daily resistance line, or At that stage, it was a daily resistance line that's coming from the end of July. And once again, we at resistance here at that 1.1 trillion and also the daily 200 moving average. So we've got a combination of a double resistance area. There's a possibility that we do drop a little bit to come and retest this breakout before possibly moving up once again. So that is what I'm really looking at with regards to the total market cap at resistance, possibility of a drop before possibly moving up once again. If we have a look now at the Bitcoin chart, and I'm once again on the daily. So same time frame on the 11th of September, found a support at 25,300, moved up into this area of resistance at 28,500, got rejected, came all the way down to test the 26,800 support, and before moving up from there, broke through the daily 200 moving average earlier in this week and broke through this next resistance area of 28,500, and now we currently find ourselves at 29,680. What I'm looking for at the moment is that we had a daily support line that was coming from the end of December last year, this white line here, that broke to the downside in the middle of August. And I'm looking for two things here. I'm looking at that 31,800 level that I showed you. And I am looking for, if price does move up here, will it reject once we get up here at 31,800 plus possible retest of this white line here, which is the previous daily support line. So this is going to be an important level if we do get up here. Okay, the next chart I'm looking at is going to be the Bitcoin dominance chart. And I'm going to go onto the weekly time frame here. Switch off this daily to the 200 moving average on the daily there. And I'm going to just go out just to have a look exactly what the Bitcoin dominance has been doing over the last couple of years. So in February 2021, we lost a support area of 60%, and it came all the way down to an area at around about just below 40% on the 10th of May 2021. And the dominance really was in a tight range over a period of, 2 years, between that 39% going all the way up to 49%. So it ranged, and it broke out of this range in May this year. So we have seen now, especially over the last 3 months or so, that the alts are starting to bleed quite badly. And that is as liquidity is leaving the alts and it's going into Bitcoin, and it's pushing up this dominance. Right now, okay, before I get to right now, where could this dominance go to? So if we go onto the monthly chart, and I'm going to do two things here. I'm looking at the next area of resistance, which we can see is at this 58 to 60%. But I'm also going to put a fib between the high in the month of January 2021 and the low of 39%. And you can see the 618 is at 60%. So there is a possibility that if the dominance breaks through this area at about 53%, that we go up and retest the next resistance at 58 to 60%. Remember, if we do move up from here, it's going to cause continual bleeding in the altcoin market as liquidity gets sucked out of it, of the higher risk assets, and possibly goes into Bitcoin. There is not much sort of resistance between these areas of 53 and 58. You can see previously there is a small resistance here at 56, with the major being high up here at 58 and 60. Now, on the short period, if I go down to the daily, I am looking at this area where we are at 52 and 53%, and I can see that we got rejected here in the end of June in this area. And if I look at the RSI for indication as to what's the RSI doing as opposed to price, you can see that at the end of June, the RSI was slightly higher than where it is current, yet the dominance currently is, sorry, the RSI, yeah, the RSI that in June was slightly higher than where it is currently, yet the dominance was slightly lower than where it's currently. Now, this is bearish divergence, and I must say that it is on a higher time frame. So the RSI is not confirming this current move up of the dominance. So for me, there is a possibility, and I'm using the word possibility, especially with the stock RSI right at the top on the daily, there's a possibility of a rejection and for it to come down once again. And if we do come down, that will be quite bullish for the altcoins in the short term. Remember, on the high time frames, we could break out of here and go higher, which will be negative for the altcoins. But on small time frames, on the daily, unless I'm looking for a possible rejection here and to come and retest lower levels of support here, that will be bullish for the general altcoin market. If we have a look at the next chart, which is the Ethereum dominance, now Ethereum dominance indicates how dominant Ethereum is obviously in the current market. And if we go on to the weekly time frame here, we have come down from an area of 21% at the end of May this year, all the way down to currently at 17.5. Now, the 17.5 is an area that has acted as support previously in October last year, in January last year, September 21. And it's really a range low support that we are currently testing. So I'm expecting a reaction in this area where we could find support here and for the Ethereum dominance to start moving up again. So the Ethereum dominance moving up will obviously be bullish for Ethereum, and a Bitcoin dominance is coming down will obviously also be negative for Bitcoin, but will be bullish for the general altcoin market. So I'm really looking at this in the next couple of days. What does Ethereum dominance do in this area? And the third chart that I'm looking at is the Ethereum to Bitcoin pairing. And if I go onto the weekly time frame here, we have come down from a ratio of 0.085 all the way down to the current 0.054. So what I mean by ratio, if you take the Ethereum price over the Bitcoin price, it obviously gives you that ratio. So the Bitcoin has been outperforming Ethereum since the end of August last year. And we've come down now to an area that has been support previously in June 2022 and also in June 2021. So I'm also expecting a possible bounce in here once again for Ethereum to possibly start outperforming Bitcoin. And that would obviously possibly be bullish for the general altcoin market. So we've got a Bitcoin dominance that has shown bearish divergence on the daily at resistance that could come down. We got Ethereum dominance that is at support that could move up, and we got Ethereum Bitcoin ratio that is at support that could move up. So there's a possibility that some cash will start flowing into the general altcoin market, and we could start seeing some of those altcoins start moving up over the next couple of days. The next chart I want to look at, I want to show you the USDT dominance, and I'm going to go on to a very high time frame, the weekly. So what this chart indicates is whether cash is flowing into the trading market or into a stable coin like USDT. Now, if we have a look at this chart, the USDT has been moving up since that period of March 2021, where Bitcoin at that stage was at 68. Bitcoin went down to 30,000. That caused the dominance to move up over that period between March and July 2021, and we moved up to a 5%. Then Bitcoin found support at 30 and then moved once again up to 69 at the end of November. This caused the USDT dominance to drop over that period and came all the way down to 2.5. And then at the end of November 2021, the market started dropping once again, resulting in cash flowing into USDT, causing this dominance to move up. Now, we are in a massive bullish pennant structure from August 2022. And the reason why I say it's bullish is because the entry is from the bottom, and there's a bigger chance of a breakout to the upside versus a breakout to the downside. So there's a 68% chance that we break to the upside versus a 32% chance we break to the downside. If we do break to the upside, it means more cash leaving the trading market and going to USDT, whereas a break to the downside obviously means that cash is once again flowing into the trading market. So bigger time frames, bullish structure. If we go into the daily is showing us that the dominance is dropping, indicating that money is once again, cash is once again flowing into the trading market. And you can see that from the middle of October, we've come from an 82.25 down to the current 7.63. So the next support area is roughly between the 7.15 going up to the 7.5%. So remember what I showed you on Bitcoin. There's a possibility that we do go revisit that area around about 31,800. That would obviously result in the rest of the market going up. I've also showed you that the dominance, there's a possibility of a dominance reversal in Bitcoin that could possibly mean that the general altcoin market starts moving again. So that would mean that this USDT carries on dropping and comes down and revisits these lower support areas. The important area, as I say once again, is that if we start breaking below the 7.25 to sort of 7.1% area, and it breaks this massive weekly support area, that would obviously be very bullish for the market. But if we find support in here, Bitcoin gets rejected at 31,800, we start moving up once again, that'll be obviously bearish for the market. Let's move over to Ethereum. And I'm going to go into the daily chart. Ethereum has really not been performing too well in the sense that it's been going sideways now since the sort of middle of August. Nothing too fantastic to talk about there. as I say, what I'm really looking for is that Ethereum dominance to find support. Now it starts moving up. I would imagine Ethereum's, once that happens, Ethereum price will start going up to retest next areas of resistance, which is this 1650 area, going all the way up to 1700. If we can break through that resistance area, the next level of resistance after that is at 1750, with the area after that 1800 going up to 1850. If we go onto the weekly chart, you can see that in the month of April this year, price really went all the way up to 2,150. If we put a fib on that, just to get an indication as to if we start moving up here, where could price go to? And areas I am looking at is the 382, first of all, which is a 1750. You can see we got rejected here at the beginning of October. If we manage to break through that 382 at 1750, I would imagine that the 618 is a next possible target right up here at 1900. And that could coincide with obviously Bitcoin going up too, and obviously cash flowing also out of Bitcoin and going into some of these altcoins like Ethereum. Okay, I've showed you the Ethereum Bitcoin chart. Keep a very close eye on there. Just remember that we did break to the downside in the middle of June. There's a possibility that if we do move up here, we have got this resistance line that's coming from the beginning of September last year that would act as resistance. If we break through there, we've got this massive weekly support line that is coming from March 2021. And if we go and retest those areas, I would expect us to go possibly and retest this area at around about sort of 7%. So for me, that would be an area of resistance. Put a fib on here too, just to get an indication. The 382 is at 6.5. That would obviously be acting as resistance to get up here. And then the 618 is at 7.3, also another area of resistance there. So all these sort of three areas here, 6.5, sort of 7, and 7.3 will be resistance to the upside if Ethereum can start outperforming Bitcoin over the next couple of days or into a couple of weeks. Okay, then the total 2 and total 3. The total 2 is, I do look at it now and again. Total 2 is the top 125 altcoins, and it excludes Bitcoin. And if I just look at the structure now on a very higher time frame on the weekly here, we have come from an area sort of at the end of November at 1.68 trillion, and we're currently at a 524 billion. But more importantly, what I'm seeing here is that we are in a bit of a bearish pattern here. We've got a bit of a bearish pennant that is formed here. And the reason why I say it's bearish is that we have got an entry from the top to the bottom where there's a 68% chance of the total 2 continuing to the downside. So continuation and break through this current bottom support area here, continue down to the downside, whereas opposed to a 32% chance of a break of the top resistance back to the upside. So we have found a bit of support here in this current area here on the total 2. at around about 500 billion. And as I said, if we do see some sort of movement in the altcoins, this could result in this total 2 going up again and retesting these areas at around about 600 billion. You can see this whole area here is resistance up here. And we have got a bit of a trend line here, resistance line also in the same sort of area that we could go visit up here. So look out for that and move up. And key areas to, if we break through here on high time frames, is 600 billion. If we break through to the upside, that would obviously be bullish for the markets. A rejection, that will be obviously negative for the altcoins. Total 3, I would imagine similar picture. Total 3 now excludes both Bitcoin and Ethereum. And in November 2021, we were right up here at 1.1 trillion, and come all the way down to where we currently find ourselves at 330 billion. You can see this area is quite a big support area. That is holding a support currently. And what I'm really looking for is if I just put a line through here, just connecting those highs. And if we do move off this area, what would happen once we get up into this sort of 350 billion? And you can see 350 billion is a resistance area. It was actually a support here in October last year. There was actually a support here in May this year. And I would imagine that once we get into this area here, we would once again be hitting resistance again. So a key area for here would be to get through this 350 billion area to the upside. The structure is also bearish. We have got an entry from the top to the downside, consolidating at the moment in this area between this 300 going up into this resistance line. And there's a, remember, I'm talking about possibilities here, not predictions. You can easily break through here to the upside and go and move up from there. Okay, then let me just go through here quickly. What else do I really look at? And just have a quick look here once again at Bitcoin on the daily. Still looking quite bullish at the moment on the daily time frame. So yeah, we could have a move up unless, as I say, we get rejected in this area where we're currently at here, this sort of 30,000 level. Could hang around up here, then possibly come down and retest these sort of lower levels here at about 29 or even a bit lower at 28,800. So we'll keep an eye on this area around about 30 and see how it forms. And then Bitcoin dominance, as I say, on the daily, it has got rejected on the daily for the moment. I want to see this dominance carry on moving down again. And then that would be very bullish, I would say, for the general altcoin market. Right, is there any other altcoins that anybody wants to look at on a higher time frame? I don't see anything in the chat. Okay, let's just share screen again. Just maybe run through one or two of these altcoins. Okay, so let's just have a look at, for example, Solana. We know Solana, we've got the conference coming up next week. And I'm once again going to the daily time frame. We've had a massive move up in Solana from the 13th of October down at 21, where we currently find ourselves at 28. And we can see we are in an area of resistance here, or a level of resistance, once again at 28. But with the conference coming up, I would imagine that there is still possible upside here over the next week. Just remember that with these events, it is by the rumor sell the news. That what I mean by that is price tends to run up going into the event, but then normally drops before the event actually starts, or at the event itself. So those people that are in trading Solana at the moment, we just have to be careful regardless of price when you get close to the event. So if we go into the weekly time frame, we've come up to an area here of 28, and you can see 28, it was support here in October 2022. It was support also in July 2021. And we now hitting that resistance. A move further up from here, if I just go and have a look and put the fib here, starting at August 2022, coming down. The 618 is at 33. I'm measuring right here. So I would say that this area 33 that we tested in the middle of July will definitely be a next major area of resistance if we get through this 28 level. As I say, with that conference, that could possibly be a catalyst for this price to move up above that. With the 786 above that, and that 786 is coming at just below 40, and that area of 40 is another area of resistance that was tested a few times, October 2022, September 2022. So the areas, as I say, are 28, where we currently are. Then after that, 33. Then after that, at 40, where we could be finding some sort of headwind. But needless to say, the event starts next weekend. Just be careful. Price tends to be by the rumor, sell the news. Okay, another coin that has moved up quite well is being Stacks, STX. Okay, I'm going to look at the daily. Before we get to the daily, let us just have a look at the weekly here. Okay, so we hit a high here in March this year of $1.31. Retraced all the way down to 40 cents, and you can see we're currently at 63 cents. We do find ourselves once again at a area of resistance, and that is in this sort of 65 cents area, 63 to 65. You can see it was actually a support in July this year, but once again, now we find ourselves at resistance. If we put a fib onto between the high of March this year and the low of August this year, the 382 is at 75 and the 618 is just below $1. So we could see ourselves, if we break through this resistance area around about 63 to 65 cents and move higher to 75, then up to just below $1. Let's have a look at something else here. Matic. I was having a look at Matic. And what I was really looking at when it comes to Matic was that we have got a trend line that is coming down, and we got the support here at the bottom here at around about 50 cents. So we got this trend resistance line that is coming down, and price is getting squeezed between this area where we're currently at 55, going up to sort of 57, and support here. So we need to keep an eye on here the next couple of days. A break through this 57 cents, I would imagine, be quite bullish for Matic, with the next resistance at 60, and after that at sort of 71. 70 to sort of 73. If we put a fib on here between the high and the low, 382 is at 65 at the top of this area of resistance, with a 618 a bit higher at 75. So there's a possibility that if we break through this resistance area, that we have a move up here to go and test the 382 and the 618 on Matic. Great. Is Shauno?
No. So in about 2 minutes, we're going to be swapping over to our next StreamYard studio, where we'll be doing the last few hours of the stream.
Okay, cool.
Yep.
So in summary, as I say, it's important to look at the macro charts at least once a week, just to get an idea where we are on a macro scale as far as the markets are concerned. We need to obviously identify a couple of those charts. I've showed you the stock markets, I've showed you the various dominance charts, and I've showed you the Bitcoin, Ethereum, and stock market charts. So as I say, right now what I'm looking at is possible continuation of Bitcoin to go and retest that 31,800 level, where we've got both a massive important area of resistance, plus we got that previous daily support line that is coming and intersecting in the same area. Number two is that I'm looking at the Ethereum dominance on support. I'm looking at the Ethereum Bitcoin chart showing us that we're on support. And I'm looking at the Bitcoin dominance that has got bearish divergence and also at resistance. So overall, what I'm looking at there is a possible move of cash out of Bitcoin and going into the general altcoin markets over the short-term period, over the next couple of weeks, and for those altcoins to move up once again. But on a macro scale, and when I look at the Wall Street cheat sheet and the motion side of things, we really need to break through that 31,800 level to negate the emotion of the disbelief. Whereas if we get rejected at 31,800, it could possibly mean that we do come back down again before possibly going up next year again. Thanks, guys. It's been awesome spending time with you, and hopefully we can join you soon again.